Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here in this video, I am going to be going over data that I have compiled from unusual whales, also going over the charts, and also going over some data in unusual whales on premium and volume that should give some insight into where these stocks are going. And so, welcome to Highly Regarded Options Theses. This is week 12. I've been doing this for about 3 months now. And so, yeah, I'm just going to do a quick overview of what's in the table here, and then I'll dive into the tickers. And so, just a couple, things that stood out to me over the course of the past week. One is Intel over here. Pretty excited about that. I did add this contract that expires in January of next year. And, I was just looking at some data with that in unusual whales, and I just got really, really excited about it. And then it popped on Friday, so that was pretty cool to see. So I am generally just very excited about Intel. And also, kind of on the note of this one, adding it with that January expiration, about a year from now, I have been adding, as you can see, a number of these contracts that do expire in January a year from now, just because for me, I like to have that extra time to build up positions, take profits well before they expire. And, that's really just helpful for me, at least as far as how I manage my emotions, how I manage my risk, all of that. And so a lot of these tickers I will still continue to cover, but I'm just going to be swapping out, some sooner dated contracts for some that are later dated. And on the note of contracts that do expire kind of soon, I did end up taking my first big loss. As you can see, there is the crying cat emoji, and that from the key is that I lost money. And so, I think that's a pretty good lesson to go over there. But really, the big thing for me is that I, have been aware of Marathon Digital for quite some time and have been seeing some interviews with the CEO, Fred Thiel. And I just feel like I've got a lot of conviction in that. And, just for me, as far as how I manage my emotions, an expiration coming up in like 2 months from now, it's a little too soon. So I felt like I would continue to get my average down and, end up losing money on that, losing more money because, I don't necessarily think it will be hitting the strike of $35 by the expiration of March 21st. So what I effectively did is I rolled the multiple contracts that I had with this expiration, and I rolled them into one contract that has a higher strike, but gives me a year to hold on to that. And so any losses that I did have here, I think I will be able to reclaim them, and also did a little bit of tax loss harvesting with this maneuver. So, I could have done this a little bit better. I could have lost less money, and so I will go over that when I go over the ticker. But that's just the name of the game. Sometimes you lose money. Ideally, the majority of the times you make money. And so that was kind of, a big hit for me, but, onward. And I do, have a strategy for continuing to make money with Marathon Digital and get that money back. So, I feel good about that. That just basically rolled that position that was a little more risky for me into one that's a little bit safer, I feel better about. And then also just scrolling down just to get these other tickers at the bottom, I did add another Rivian call. This one again, expiring a year from now, just because, I feel a little bit more comfortable with that. But, I actually don't hold any more Rivian. I do have a few shares, but, I just, y'all go over it in the chart. I don't feel as confident in the chart anymore. And then also, of course, Unity Software and then the VIX, just kind of like to keep an eye on that. And I did mention this one earlier, but maybe not by ticker name. Celsius, CELH, did add that with the January 16th expiration. But anyways, enough going over the list there. I'm just going to go over the details here before I get into the individual tickers, the data, and the charts. And so overall, this is really just a personal trading journal, a documentation for myself. Making these videos, putting these tables together helps me. And so hopefully it can help you guys in learning a little bit more about options, managing risk, taking losses, taking gains, stuff like that. So hopefully it's helpful for all of you guys. But I should say that all of this, it's just for educational purposes only, really just to be having some fun. None of it is financial advice. And some, if not most, of these trades will be bad, as I am learning as I'm going with this. So take everything that I say with a grain of salt, especially because most, if not all of these contracts will be going to zero by the time they expire. They might be, I suspect most of them, if not all, will be expiring worthless. So keep that in mind. Options are very, very risky. And with that being said, with volatility being in the market, as I do like to keep track of the VIX, plans change. And so whatever I talk about in this video, my plans may change between now and next Saturday. So do consider that. And also, the spreadsheets that I have here, this is taking data from mainly Unusual Whales, some from Yahoo Finance. But this is stuff that I compile manually, so there could be typos, so do consider that. And again, as I've mentioned, I'm using data from Unusual Whales. Personally, I have an annual subscription to their data, the tools that they offer. And, what I would actually encourage if you're interested in Unusual Whales, I'd say, just go explore their website, get familiar with the free tools that they have. And if you can learn how to use them, maybe it's worthwhile getting a monthly and or annual subscription. And so that's really, what I did. Initially, I started with a monthly subscription for 2 to 3 months, then realized I was just overwhelmed by the amount of data. Then I started using the free tools that they have, compiling these spreadsheets here, just compiling the data in a way that makes sense for me. Hands-on access to that data really helps me learn, really helps me, take in the information. And then once I got more familiar with it, then I got the annual subscription. But anyways, I think it's a lot of great tools there, so I'd encourage checking them out. And then also, I do have timestamps to all of these tickers. I'm not going to do it by individual contract, but by tickers, so you should be able to find the ticker you're most interested in. But I would encourage watching the entire video from beginning to end, grab a coffee, a beverage, whatever you like, and just kind of enjoy learning with me. But then I did want to, before I get into, again, all of the data, did want to go over this little guide that I have here, changed it from thesis to guide. And, for that reason, the reason for changing it to guide is because, I don't necessarily always have to follow it. And I think it's good to have some room for flexibility because sometimes these trades are going to be, bad or, plans could change. So I shouldn't necessarily stick to this precisely. But, what I do have marked at the top of the guide, this is, because I don't want to be falling in love with these stocks or these contracts. I don't want to have FOMO and chasing plays, and I do not want to get jealous of those who are making money. If I'm not partaking in the trade, that's great. Happy for others. And also kind of falling in line with what's down here. I do not want to get greedy. And so kind of my plan with these trades is that if I get one contract, my goal is to sell for 80% profit. What I'm finding is that's probably a little ambitious, whereas 20% is probably a little under ambitious. And so I really just need to find the right balance for this. But effectively, if I get one contract, I plan to sell at a limit of 80% profit. If I get 2 contracts, I plan to trim one of them at 20% profit, and then the second one closing out the position at 80% profit. If I get 3 contracts, I'd up that to 100%, but really that is just if I'm getting into the stuff that I have a lot of conviction in, because, let's say a trade takes place over the course of a week. If it goes up to 80 or let's say 90%, I think that's pretty good. I don't think I should get so greedy waiting for 100%. And if that's done in a short time frame, that is good. But then as I get more contracts than 3, getting up to 4, I would then trim at 10%. Fifth contract, I would trim at break even just to be lowering that risk. And then once I get above 5 contracts, I would be planning to take profits in multiples of 100% gains, ideally getting up to a 10 bagger. But I don't suspect that will be happening anytime soon, as I am learning. But if price does, or the premium does go well above 20%, what I should be doing, because I have ended up being in the green and then ended up holding the bag, like on AMC up here, is to set a stop loss at 20%. So let's say it goes up to 70%, but not quite to 80%. That's fine. Just place a stop loss at 20%. So if it does come back down, whether it's to 20% or, to my average, I'm at least taking some profits at 20%. And then here at the bottom, I do have this note of end the week with less than or equal to 20 positions. And that initially was between contracts and shares. But now I really just kind of have it partitioned with a list of contracts, whatever number that is, ideally being less than 20, but then just the number of stocks that I'm following, whether in shares or contracts, should be less than or equal to 20 positions. And really, I think over time, I will want to scale that down. Just as I get more conviction in some of these plays, I can then put more money on them and then swing them for quicker, bigger returns. So that is really the goal. And then let's see. I should note that a link to this spreadsheet will be in the description of the video. You won't be able to edit it, but you will be able to access it, can download it, and then save as your own version and edit it if you like. But really, yeah, this is just kind of tracking, the stocks that I like, the contracts that I like, and just using the data in a way that's helpful for me in my learning. And so sharing it here, hopefully it's helpful for you guys as well. But yeah, so now that I've gone through all of this stuff, I'm going to dive into the charts and the data. And actually, before I do that, I'm going to bring our friend Ed back. Okay, so let's dive into the first ticker on the list. And so that is going to be AMC. This is the $8 call expiring June 20th of 2025. This is one that I could have sold up here for some nice profit above 20%. Could have had a stop loss, at 20%. I didn't do that, and now I am currently in the red. I did recently trim at just above break even, taking a profit of only 48 cents. That was a couple weeks ago. It looks like on the 7th of January. They're just behind Ed's head there, right up here. You can see that going across. I sold at 54 cents when my average was 53 cents. And so that's great. I'm happy about that. I was considering exiting this position just because, with the recent dilution, price came down along with the premium. I just, I'm a little bit sketched out about this one in all honesty. But I do still have 2 contracts at that average of 53 cents. My plan is really just like, I am not going to be adding to this one until if price does come down to, let's see, $3 a share. I'm just going to color that yellow so I have it on there. And so that's just kind of to keep that in mind if price does come down to $3. But actually, I should make it $3.05 because that's what I was talking about in the AMC DD video that I put out yesterday. But yeah, just looking at the data here, what we can see is volume in blue, got this nice big spike over here, and that actually corresponds with the premium traded on that day of over $60,000, which in all honesty is not that much money. It doesn't really stand out to me as far as premium goes. But what we can see over time is that the open interest has gradually been increasing, although when there was that big spike, open interest did come down. So, that, is not such a good look there. But, it is what it is. And with the, let's see, the average prices for that premium over the past week, about 10 cents lower than my position size or my position average, with the high of last week being 47 cents hit on Friday. So maybe next week we start to see some volatility. This spikes up a little bit and I can trim out of my position. And so it looks like the limits that I have set for this one with my average at 53 is to trim at 10% and then exit at 20%. And then I will probably forget about this contract just because June 20th is, now less than 6 months away. And so, I just feel a little bit uncomfortable holding that at this point, especially because we just got this dilution. In my view, that was kind of like a rug pull on the shareholders. So I just didn't really feel too good about that. But, it is what it is. And so the other ticker that I'll be going over, or sorry, not the other ticker, but the other contract for AMC is, let's see, this one, which is the $20 call that expires January 16th of 2026. So we got a year between now and its expiration. So feel a little bit more comfortable about this one. I would consider adding if it does dip down to $3.05. But otherwise, I am just kind of chilling with my position. I did sell one contract at an 80% profit, which looks like it was about $28. I do have a number of other contracts. It looks like I've got one, two, and this should probably say 500. I think I maybe typoed that. But yeah, then I would plan on trimming at, 79 cents. These numbers up here going up to what would be a 500% gain at $2.35, considering that my average is 39 cents. And so just looking at the data, we can see, stock pricing and premium have come down over here. Looking at the volume in blue here, we do see this nice big spike over here, and that looks like it corresponded with a premium of over $800,000. So, nearly $1 million. That's a good amount of money. I feel good about that. And then following that, we did see, a spike in the premium, although it's kind of been flat, did pull back a good amount, but following this pullback, it has gone higher. And so it's quite possible that the spike that was over here, whoever was responsible for that spike, perhaps they sold here. Quite possible, but overall the open interest has just been going up, so I do feel good about that, or at least I feel better about this contract than the other one, just because it has the expiration, a year from now versus, just like for 5 months from now. So I think that is something good to be considering. And so now I'm just going to go over the AMC chart really quick. And I did just put out a video that I actually have linked here, AMC DD, Deep DD, going over debt and compensation. Maybe you're not interested in the DD. The first part of that video, I do go over the chart. So I'd encourage checking that out to get more of a deep dive into my analysis. But effectively, what I see here is that price could be getting rejected from this purple downtrend, which, has been a pretty notable level in the past. And so what I would like to see is it putting in higher lows. So, I don't really want to see it coming down below $3.25. If it does come below 325 and if it breaks below 321 here, which was the low on January 15th, I could see price coming down towards this gap. But my thesis is about the stock price not filling this gap. Whoever's waiting for this gap to be filled would get left behind. And really anybody waiting for it to come down to $3 a share would get left behind. So I view that rather than $3, I view that $3.05 is a good level to get more aggressive with these contracts. And I did mention that thesis that I have. So on January 3rd, I did put out this video. That's my 2-month AMC Theaters thesis, which looks like maybe it's not a, I guess it's not a hyperlink, so I'll have to adjust that before I post this. Is it a hyperlink over here? No, that's kind of annoying. I'll have to adjust that anyways. My 2-month AMC Theaters thesis, it is online. And actually, a lot of these don't really look like they are hyperlinks, which is kind of annoying. But yeah, it is what it is. This one at the top is a hyperlink, as you can see. Sorry about any of those links that don't work. I may not be able to fix them before I post this just because I have to be at work tomorrow. But if we do go back to the chart, let's see, why did I pick those levels of $8 and $20? So $8 really just corresponds kind of with filling this gap up here at around $6.85. If I think that the stock price could be getting up to $8 a share, but following the dilution over here and the raising of capital based on an average price of $3.68, which in my view is a total bummer because price was up here around 5. See, I mean, I just don't feel good about that dilution. I'm sorry. You can disagree with me. That's fine. But, you know, I do feel like for that strike that I have, price could be coming up to 8. I just feel not as confident because of this dilution, because of being below all of these levels now and getting towards the bottom of this range here between these two gaps. And then $20 a share, the reason why I picked that is because there is this gap up here at $19.60, which was the closing price on August 23rd of 2023 when we were doing, 1 for 10 reverse split, infiltrating or injecting the apes into the AMC shares. And also, I believe there was also some dilution on that day. So we just got nuked at that time. And so getting back up to $20 a share, maybe that could be happening over the course of the next year, but I think it would likely be kind of like a dramatic move up like this and then a quick rejection. And so, price doesn't have to close at 20 on January 16th of 2026. As I mentioned, most of the contracts will be going to zero. And so I think that one will likely to be going to zero, but I could see stock price trending towards 20. And so, I think that could be a great opportunity to make some money on a longer dated contract. And speaking of AMC contracts, let's look over at the unusual whales data. So I'm just going to be going over this chart for all of them, because I've recently kind of discovered it and have been getting better at understanding it, interpreting it, and I think it adds more value to, the kind of data that I go over in the spreadsheets, because, Unusual Whales does offer stuff that looks similar to what I plot, but, I think that this is complementary, additional to it. And so anyways, what we can see here in the yellow is the stock price from Friday, opened higher, closed lower, so not such a good look there. But what we see in red is the net put premium, and that kind of hovered around this horizontal line there, being pretty close to zero. So that is a good thing. And what we see in the net call premium in green here is that it went up dramatically over the course of the day, or at least I should say at the first part of the day, and then it held, inching its way up over the rest of the day. So I think that's good. And it does look like the net call premium increased by over $600,000, so more than $500,000, so that's good. Whereas the net put premium, which you can see these numbers over here, decreased by a little over $9,000. So, kind of flat relative to the net call premium. Overall, this is bullish, more volume for the increase in the number of calls being bought up, whereas there's a little bit of a decrease in the puts. At least that's as far as I understand it. And this is just over the course of one day. But if we look back over the course of the 7 days, we can see how there has been kind of a little bit of a regime shift where we, had price coming down here with the number of calls going up, green volume here. So that was looking good, but it wasn't like super, super substantial. Then we got, a lot of puts being bought here. So not such a good look. But then the decreases in volume here, calls being negative over the course of that day, but then kind of, reversing. And then here on the 15th, this is when we were putting in the bottom. That is when the raising of capital from selling shares, the 50 million shares, was completed. And so we can see that the call premium was going up on that day. It looks like it ended at a net call premium increase of 1.28 million, which you can see in the number over here when I get my cursor over there, so 1.28 million, whereas net put premium on that day decreased by nearly $500,000. So that's starting to look pretty good. And we just see this volume increasing with calls going up in green, puts being flat or negative. So, I think that this is overall just a very good look for AMC. So I am feeling like if, just looking at the chart here, we could very well be putting in a bottom here, but I do want to express some concern, some caution that we might be getting rejected from around like 380, 385 at that purple downtrend coming down. And if we do come down, let's hold above 325. But if we break that, if we break below 321, like I said, $3.05 makes a lot of sense to me. But let's get back to these contracts. And so the next one over here that I'll be going over is the BlackBerry, ticker symbol BB, $7 call expiring January 16th of 2026. So what you can see is price and premium have gone up. Looks like it might be forming a little bit of a bull flag. And what we can see in the volume over here have these nice little spikes, and those spikes correspond with, about 90,000 over here in premium. Let's see if I scroll down, we can see it about 93,000 on that day. And then over here, we have a premium of just under 140,000, looks like 134,000 that we can see. And so both of those spikes correspond with increases in the open interest. That's the green over here. So that is looking good. But considering that this is like, a $3, $4 stock, there's not tons of premium traded, at least not on this contract. So, take that with a grain of salt. But, thing that I'm excited about is I had previously been trading a contract, I think a $5 contract or strike that expired in June, but I swapped over to this one. And so, yeah, I just bought on Friday, and kind of the big reason why I wanted to get into this one, it's kind of silly, but, I just kind of think about, if somebody was to ask me, what's a stock that you're bullish on? I find the response of BlackBerry to be really funny. So, I wanted to get long on it, just for that, $48 is what I'm risking right now. Don't have any buys placed to pick up more, but I will reevaluate. I could actually see this pulling back some, which I'll go over in the chart. But generally, like I mentioned, I do think that this is probably a bull flag. It's probably going higher. So, I feel pretty good about this. And if price does dip lower, I think I'll pull it up on the chart here in a second. I would like to start accumulating some shares because, I'm not going to be diamond handing these contracts, but shares, I could do, pick up a little position because the shares are so cheap. But if we do go over to the chart, looking at the BlackBerry chart here, we do have this bearish engulfing candle from Friday, came down over 5% on the day, so not looking so good there. And so for me, the level that I have my eyes on is $3.55, being somewhat arbitrary. It looks like that's a 100% retracement from something. It looks like it was just the pivot high from, let's see, May 14th, hit a high on that day of, $3.85. So if we do pull back to that level, I would get, interested in really just picking up a very small position, basically just picking up 2 shares. If it goes lower, I'll add to that more aggressively. If it doesn't, I'll just have 2 fun shares, no big deal. Just so if I do sell a contract, I would at least still be holding some BlackBerry because I think it's fun. But yeah, if we do take a step back, why do I see it going to 5, which was the previous contract that I had held? We can see from this Fibonacci retracement here, the 1618 is right around $5 a share. Also, we do have this top over here around 445, so pretty close to $5. And we also have this top over here of 575. So really, in that range from like 450 up to 575. Price I could see getting up to there, but the contract that I now hold is $7. So why did I pick that? We do see the highs from, looks like August of 2022 being around $7.20. So that's kind of why I picked that level. And, between now and a year, I think that's a pretty reasonable target, or at least that price would trend in that direction. I can start trimming, in those increments. But right now I just have one contract, so I can't really trim. I can only sell. But I did want to come back to this because I did want to know $3.85. Color that yellow and color this yellow, so I know that if it does dip to 385, and I'll actually kind of be notified of that because I'll be picking up some shares. But then it's like, well, then maybe I want to add another contract to the one that I hold now. But yeah, let's look now that we've gone over the chart. Let's look at the unusual whales data. And so, I got the AMC stuff up here with the 7-day here. And so I'm just going to go to the ticker here, type in BlackBerry. And so now we are back on the 1 day. And so this actually looks really good, even though there was a bearish engulfing candle. What we see, bearish engulfing candle, stock price in yellow came down. Not surprising to see that in the chart here. But what we see, like AMC, is that net put premium was pretty close to zero, pretty flat over the course of the day, whereas the net call premium went up and then stayed up over the course of the day. And so what we have here with the net put premium in red, that went up by $6,000, so not a crazy amount, pretty close to zero. But the net call premium went up by over $215,000, so a good amount there, but not quite, $250,000, but still, it's a good amount for a $4 stock. And then we can, of course, see that the volume over the course of the day did increase, more contracts being picked up, and those contracts being calls. So this is a good look, regardless of, this bearish engulfing candle. We're still forming higher lows. So, even if we do come down to 385, relative to this low, it's still a higher low. So, I don't think that would be so bad. But then if we do look at this over the course of the past 7 trading days, we can see that there was some red volume over here. We did have a good amount of calls going up in premium, but this is actually where this kind of gets a little confusing for me, because we see the volume here in red just behind Ed a little bit, but hopefully it doesn't disrupt too much. It's just all red behind him, as you can see. And yeah, so with this, we did see, the net put premium coming down. And so this just kind of makes me think that, the net call premium, maybe those were being sold as like covered calls. So just kind of, to hedge. Yeah, I'm not exactly sure. This is a little bit confusing to me. But anyways, this kind of signal doesn't really like stand out to me that much. Although seeing the net call premium up here go up to like 327,000, that does stand out, but it's not really backed by the volume, at least not in a way that makes sense to me at this point as I am learning this. But what does make more sense is flipping from red to a little bit of green to a lot more green in the volume, seeing the put premium being more or less flat really over the course of these 7 days, whereas the net call premium has been going up each day. So that is just a really good look to me. And so I feel pretty good about BlackBerry. That's why I had to get in on that contract. But anyways, let's flip over to the next one. I got 2 here on Celsius. One is the $50 call that expires in June. This is one that, let's see, I still have 1 contract, it looks like. I plan to sell at 80% profit, but I may not get there. I may have to be getting my average down. But, rather than focusing a ton on this one that expires, less than 6 months from now, which makes me feel a little uneasy, I do have this other contract that I'm eyeing, which is the $100 call that expires January 16th, again, a year from now. And so it doesn't look like, actually it does look like I did pick up 1 contract on Friday at 54 cents. And so, I will look to add to this one, but I may also, look to add to this just to get my average down, and then to kind of exit this position to focus more on the longer dated contract just to be, a little bit safer. But anyways, looking at the data here, what we can see is that, we got these spikes in volume here. And, to be honest, they don't really stand out regarding the total premium traded on those days. The highest premium was about $70,000. So, nothing too crazy corresponding with the spike here. And we actually see a little bit of a decrease in the open interest in green there coming down after that. So maybe that's not the best sign, but generally we can see that the open interest has been trending up over this time frame. So, that is good. And, what we can see here is just that, I have 1 contract and my average price, or my average premium price, is $1.27, and currently it looks like the premium is notably lower than that, about 27 cents, or 47 cents, about whatever, mental math, lower than that. So I am kind of surprised I don't have the green listed here, suggesting that I do have a buy order placed. It's perhaps possible that I forgot to add it to the spreadsheet, just because I'm working this weekend, kind of busy. But generally, this is one that I would look to get my average down, but I feel like I'm probably just looking for some of that unusual whales data to be flashing more that the bottom is in. I'm just not seeing it yet, so I will go over that in just a second. But then looking at this other contract that expires in January, did pick up one contract at 54 cents. And with this, the data up here, we can see these spikes in the volume. This first one, it looks like it corresponds with a spike in premium of over $250,000. So that is, pretty nice to see. Generally, we can see that the open interest has been going up, but with this more recent spike, that actually corresponds with about, let's see, what is the level there? That looks like it was a spike open interest of about $66,000. You can see that right here. And so that was followed by a drop in the open interest. So that's not such a good look. But, we'll have to look over at the chart and the unusual whales data to get a better idea of, how that's looking. And so looking at the chart over here, what I have my eyes on is really like this thick uptrend that's based on the, open price from November 19th and then the closing price from December 30th. We have been putting in higher lows. And so I want to see that be held. And so it is quite possible that the stock price could be coming down over the course of the next week. But if it does, I would want to be seeing it holding above, really like right around 2608. Let's see, I'm not sure exactly where that level originates from, somewhere in the past. But, that just being approximate, I want to see it holding above 2608. Which, corresponds with the low there. And actually the low here on January 13th was 2608. So maybe that's, just a magic level. And actually I'm curious to see where that does originate from, because, there's the low over here was 2608. Interesting, because, that was the recent low that we saw right here on the 13th, 2608. So hopefully we hold above 2610. Hopefully we hold above 27. But if we don't, let's see, I've got this Fibonacci retracement here in white, and the 786 for that is at 2663. So that's a level to be keeping in mind. And then I've got this other Fibonacci here that we can see, the 786, also right around that same level, 2676. And so that's actually kind of, the level that I have been using to, alert myself for, hey, dip buy opportunity, whatnot. And so I could actually see it coming back to that level, but hopefully we don't, open or close, lower than it. Hopefully we only get wicks below it, and then, we start to take off. So I think that would, be really good for this stock. And then if I do come back to spreadsheets here, I did have the strike of 100 and let's see, and 50. So why did I pick those levels? And so coming over here, we can see I've got this yellow line here at 49.30, which I think it's somewhat arbitrary, but really just corresponds with consolidation that was over here, but especially all of this consolidation above that level, I think it's going to be tough to get above. And then we, of course, have this double top here right around $100. And that, we see the double top there marked in orange. So that's why I have that other strike. And so, let's flip over now to unusual whales to look at the data there. So I'm just going to type in Celsius up here. And, this, in all honesty, is why I don't have a buy place, why I'm not getting super aggressive, is because it just seems kind of mixed here with the volume going green, going red. And so personally, I don't really know how to interpret that well, the data here that well. But what we can see is, stock price came down over the course of the day. We can see that in yellow. And then we have kind of, the first part of the day, it being, 50-50 up and down for net call and net put premium. But then the net call premium came down, suggests some selling. And, we see that volume decreasing here. Then it goes back up. So that's starting to look a little bit encouraging, especially as net put premium is coming down, suggesting that, more calls are being bought and some puts are being sold. So that's a good look. But then it ends the day with, those calls being sold off. Puts going even lower. So that is potentially good. But just seeing these calls come down gets me, not feeling super confident about it. And if I flip over to the 7 days, we can see that, over here, is looking more bearish. And then here it's kind of, 50-50. So, I really want to wait to see this looking like, just like this is red going up here, that's puts being bought. Net put premium is going up. Net put premium on this day, so on the 14th, went up by over $2 million, whereas net call premium went down by almost $1.5 million. And so that right there, looks fairly bearish. Maybe this is the beginning of, that signal starting to fade, and maybe it will flip green. We're just not there yet. And so once I see that in this data, then I'd think about, adding to the contracts that I have a little bit more aggressively. But for now, I'm kind of just sitting with what I have, not being too aggressive with adding or planning to trim really just yet. And so the next one on the list, this one, in all honesty, is kind of a dud. This is the ChargePoint $2.50 call that expires in May. So coming up, making me a little bit nervous. And yeah, and with it being a $2.50 strike and current price being right around $1 a share, I feel like it's fairly unlikely that this one is going to be going to zero, that we won't be going up to $2.50. So I've just lost a lot of confidence in this. I do have a buy for, I believe, 2 contracts at 4 cents, really just to attempt to get my average down. As you can see, my average is at 9 cents. We have gotten some spikes over the past couple weeks to, around or above what my average was. But, the orders just don't get filled. Like when it went up to 12 here, when my average was 11, didn't get filled. I did have a limit placed at 12 cents to sell. And so that was unfortunate. And so, I'm just trying to get my average down. I did buy, it looks like 2 contracts here, 5 cents each, 2 of them there, and that did bring my average down to 9 cents. Hopefully we can see a pop, and then I'm just going to get out at, what is effectively a 10% gain, but really it's just a 1 cent difference from my average. So it's really not that exciting, but I just have very little confidence in this. And one of the reasons for that is just the amount of money behind it. And that's also, it kind of makes sense because it's like $1 stock. So, not a lot of money behind it. But what we can see in these spikes in volume is we can see steady increase in open interest. So that's good. But if we look at the premium behind these spikes in volume, it's only like $9,000 at a max. So, it's just not, a lot of data to be going on about. And so, while I do have this buy placed here, I think I only have, about 10 contracts. So not a lot. I'm risking $100. That's not a big deal. If it goes to zero, I'll live. But, this is just kind of like my feeble attempt to get my average down and then hopefully to exit, really ASAP. But I've been saying that for weeks now. So, hopefully we start to see a turnaround soon. But let's look over at the chart so we can get a better idea of where this might be going. And so, yeah, this, put in lower lows, hitting a low of 102 on these 2 days, on the 13th, so Monday, and then the 14th on Tuesday. So, I don't really feel too great about that. And, this idea that I had for what the stock price could be doing, getting up to around, this is like 240 where the cursor is, right around 250. I don't think that's going to happen, but maybe it's, positioning to, just, bore people like me out of their positions before it really rallies. So, I'm just going to try and wait it out until May. I'm not risking a lot of money, so it's not a big deal. But I also do want to point out there is this gap here at 169. But yeah, I mean, the strike is 250. And so, I want to see price getting up to there, but it might just be taking a little bit more time. And so, one thing that might shed some light on that is if we do go look over at the unusual whales data. And so I'm just going to type in ChargePoint up there. And what we can see for the 1-day data is that, price came down, but really was just like barcoding over the course of the day. So, it's just algos trading back and forth, and it's just not a good look. We can see that the net put premium in red was coming down over the course of the day, so that is good. Suggests that people are, selling puts, which is, bullish, whereas calls, unfortunately, it'd be nice if the calls were going up, but they were just kind of flat over the course of the day. But what we do see is, volume was increasing towards the end of the day, suggesting that, it might just be that the decreases in this put premium were then, balanced by some buying. So, I'm not really sure. It's a little bit tough for me to interpret volume increasing when we see, either the premium being flat or going down. But, that is the data there. And so if we look over at the 7-day data, really, again, it's just there's not enough traded on this to really be signaling anything. Like we see the spike in calls here that corresponds with a net call premium increase of $72,000. So really it's just not that much money. Whereas over here we see a decrease in net put premium that would be bullish. And that's a decrease in net put premium of $91,000, whereas net call premium on that day decreased by $23,000. So both decreased, but these decreases in the red, the net put premium, that's bullish. The increases in the green, that's also bullish. So, it's looking better than it has in the past. So I think that what we're seeing in this chart here is really just, faking out, shaking out people who were looking at the low from November 21st, being at a price of, 105, just shaking those people out, sweeping the lows. So, putting in a lower low, it's bearish. It's going to go sub 1 now. Maybe 102 is the bottom. Maybe there are a bunch of buy orders placed at $1 and they're going to get left behind if this does move, and then they'll FOMO in, and then that will send it up to 205. So there's still hope with this one. It's just boring, and I am not too impressed with it. And part of that is a good lesson learned. You want to be looking at contracts that have a lot of money behind them. You want to be looking at the ones that are supercharged by whales, and this one definitely is not. With that spike in premium of $9,000, that's really nothing. But anyways, let's go on to the next one, which is perhaps a little more exciting, and that is the GameStop $80 call that expires in June. And so this is one, it looks like I still have 2 contracts. I did, pick up 2, having an average of $3.25. I did sell one, let's see, that was above 20%, but I recognize it's probably not going to 80. I should just, sell one of those contracts in case it does go lower, and then I could buy it back lower. And that is, in fact, what I did. So, I had these 2 contracts, or this one contract I had bought twice, one at $3.50, one at $3, put my average at $3.25. Then I sold at $4.05, and then I bought that back at $2.20. I felt like that was going to be a great discount. That was the low from the previous day, but as it turns out, the low that day that I bought was actually $1.86, so I could have gotten a better discount. But then it's like, okay, we'll just chill, pump the brakes, evaluate, see what's going on. And so, we started to see kind of a spike in the price towards the end of the day on Friday, which I'll go over in the unusual whales data. And that kind of got me thinking, well, if it's closing closer to the highs, maybe I want to place a buy order. So I did place a buy order for $1.60. The low on Friday was $1.58. Hopefully this gets filled, but if not, I've got, let's see, over $500 put at risk that expires in 5 months. So that's, a little risky, but you know, it's not so bad, and I would be interested to add some more, you know, one more contract at $1.60, but it not being super aggressive, you know. And what we can see with the data over here, spikes in the volume kind of corresponded with this weird move in open interest going up and then coming back down. So, you know, buying here and then selling here, you know, a little bit odd, but generally we see that the open interest has been trending up with this more recent spike, which corresponded with a spike in premium of over 40,000, looks like 46,500. We did see a pretty nice spike in that open interest. So that is looking good. So, you know, I feel good about that. But then let's look over at the chart to kind of evaluate what's going on over there. And so with this, yeah, I mean, I could see it revisiting the low from over here, which was at $26.15. Excuse me, $26.15. So, you know, I am bracing for that. I am prepared for that. But, you know, I personally, last week, I was not expecting it to be breaking below 29, you know, the 618 here where the cursor is at 29.30. I was expecting, you know, maybe price would come down to 29. And, you know, surprise, got that in a day and actually came down all the way down to the 786. That's at right around $28 a share. And so we're really just kind of like flirting with that, breaking below it, closing below it. So not looking so great. But towards the end of the day, we did get a little bit of a push up from the lows. And so we can explore that in the unusual whales data. But, you know, I think that if this does come down to 160 as far as the premium for this contract goes, you know, I'd be happy to add another contract. If it comes down to 26, probably add another contract there. Maybe we pull back to this, you know, white uptrend that I have drawn here. It's kind of, you know, not the most perfect because we did break below it a little bit here. But yeah, I mean, personally, you know, I want to see 26.15 be held. And if not, then, you know, I'd be risking these contracts going to zero at that point. So I'm hoping that we hold 26.15. I hope that we actually, you know, reclaim the 786 and start to move higher back towards 32 and to this orange uptrend. But, you know, we're just going to have to wait and see. But something that was encouraging, you know, on Friday that kind of sparked my interest in, well, maybe I want to get a call, add another one to my holdings. If we do look over at the unusual whales data, look at the GameStop data, you know, we'll see this in the yellow. You know, the stock price was bleeding down over the course of the day, but then there was kind of this big surge in price. And this should be, let's see, this should be Eastern time. And so that little surge was right around, you know, 145. And so I'm not sure exactly because, you know, let's see, 145. So that would be, yeah, 145. I'm thinking 1245 for me because I'm in the Midwest. But I believe that, you know, there's been some notice, Roaring Kitties noticed that there tends to be some spikes in GameStop right around 145. And so that's exactly what we saw on Friday. But unfortunately, we did sell off most of those gains. So, you know, that doesn't look so great in that sense, but it was nice to see this spike. Generally, what we see is the net put premium increasing over the course of the day, along with the volume actually decreasing. And so that would be because net call premium in green was coming down. And so that does suggest, you know, selling of contracts, driving that premium down. And so, yeah, so this doesn't look so great, but, you know, maybe it's a fake out. Maybe we get some volatile moves next week. So that is, you know, what I will be looking forward to. But then if we do switch over to the 7 days, yeah, it does look like really it's just been red, volume decreasing, puts increasing, calls decreasing, or at least the premium of those. So not a good look generally, but what might be a little bit encouraging is that the volume decreases have been a lot more in the past couple days. They've been a little bit lighter, so maybe that's good. But maybe that's also just because we've got a 3-day weekend here with Martin Luther King Day on Monday. But one thing I did want to point out with the chart is, when we were getting all this red here, we did see this double top here. And if we look at the volume corresponding with these two peaks, with this first peak, we see a pretty big spike in volume, whereas the second peak was a lower spike in volume with a higher high in the stock price. So that, while it's not the RSI, it's still bearish divergence because you're seeing, let's see, is this actually a higher high? The high over here was 34.37. So yeah, 3 cents higher high in the stock price, lower high in the volume. And so you could view that as bearish divergence, that this second top here, the double top, was in fact a double top. It's showing some weakness, and then we did get this rollover. So that was kind of a tell there. But, this is, I'm getting used to tracking, double tops following with the volume. And that was a clear signal that would have been a good time to trim here to then buy back lower. But, at this point, I think it's kind of just cool to be, relaxing. So I'm not too stressed about that. Coming back to the chart over here, or the data over here, let's look at the Hycroft. The Hycroft mining contract. This is a $3 call that expires in May. This very similar to ChargePoint, one that I personally want to get rid of just because there's not enough premium traded on this to really get me excited. It's just too cheap of a stock. And so what we can see here is, to be honest, I've got way too many of these contracts. I'm in more heavy than I should be. I think I've got at least $500, maybe $700 on this. And, I just want it GTFO. So I plan on exiting, at 40 cents, which would be just slightly above break even with my average at 39 cents. To be honest, it might be break even. I might even lose a little bit on that with fees with so many contracts. Might add up to like 50 cents or something that might put me in the red a little bit. But, effectively break even. But I did get, one contract last week at 20 cents on Tuesday. Really just because I had my, average at 40 cents, like, well, I'll just try to get it down a little bit so I could make a small amount of money if that does get filled. We did see some highs of 30 cents, so that's starting to be encouraging. I think that I might be able to exit this one with my money and not lose, so that would be great. And then I do have a buy order, possibly for 2 contracts, but it might just be one. I'm not exactly sure. For 10 cents. It looks like the low last week was, in fact, 10 cents, but that order was not filled, so, I'm just waiting for it. But with this recent spike that we've seen in that premium, I don't necessarily think, the 10-cent one will get filled. But, I'm just kind of sitting on the sidelines. I'm just going to wait for this to get filled, and I'm just going to be happy I did not lose money on this. This is just not a contract I think that is worth tracking because there's not enough money behind it. And generally, Hycroft mining, there's just not enough money behind it. But anyways, we can see these spikes in volume in blue correspond with spikes in premium over here that go up to a maximum of about $4,000. So that's nothing, not worth tracking. Anyways, with these spikes, we can see that the open interest has been going up. So generally, that does look good. There's just not enough money behind it. And then so if we do go over to the chart, we can see that, I have a little bit of concerns that there's like a down move, consolidation. Maybe it's going to break lower. But, what we do have, I've got this line over here. Maybe I should make that a little bit thicker. And maybe, I don't know, what color do I want to make it? I'll make it orange. I think I actually drew that over the past week, gave me a little bit of confidence that we might be putting in a bottom. And so that trend line, that uptrend, is based on the low from over here, September 3rd, hitting a low of $1.95. And then over here, it looks like that's based on, I believe, the low from, let's see, December 20th. That was a low of $2.01. That was also the open. So yeah, corresponding with where that dot is right there, right where the cursor is. Got some consolidation there. That level acted as support. So maybe it's acting as support again, and maybe we could be going higher. And before I forget, I should go back to the contract. It's a $3 call. So why $3? I think it's pretty reasonable that price could be getting up to $3 a share. We did hit a high over here on October 22nd of 294. So I think it's definitely possible that price could go up to that level between now and May. And so I'm just going to be like chilling with this contract, and hopefully I can get out of it at break even. I'm sure I could make more money, but, I just want to get the risk off the table, in all honesty, especially because, if we look at this retracement here from the lows over here of 195 up to that high of 294, we have the 786 at 216, and we're trading below that. So it's a little bit precarious there, but, another 786 on the shorter time frame got this one going from the low, let's see, of $1.99 hit on December 24th, going up to the high of $2.37.3 hit on December 30th with this nice spike in volume here. 786 for that is at 207, and we are trading above it. So, hopefully we can start to get some nice moves higher. But, I am just, waiting for it patiently. And, I think I will be able to exit the contract with the recent spike that we saw, the past couple of days, getting the highs of 30. If the highs were 40, this probably wouldn't have been filled. So we probably need to get pushed a little bit higher than that. Oh, and I should also mention one of the things that I really don't like about this contract is it can only be traded in 5-cent increments, or at least that's how I have access to it. And so, if I wanted to trim at break even, I couldn't do it. It'd have to be at 40. If I wanted to go any lower, I'd have to sell at 35 cents. And so I just don't really like that. I just feel like it's going to be harder to get fills because of it. And so, yeah, I just want to GTFO that position. But anyways, let's look over at the unusual whales data. Maybe there's something encouraging there that we can see. And so looking at the data here, yeah, this, it's not really convincing me too much. This was nice. Increase in green volume with the calls going up, also with the stock price going up in yellow there. So that looks good. The calls did go up, but then it does look like we saw a little bit of, selling here. But, actually, this actually doesn't really look that bad. It's just not a super strong day. Because if we look at the net call premium traded on the day, a whopping $1.21 thousand. So that's absolutely nothing. I am not interested. And the net put premium went down by a massive $56. So yeah, this is just one, it's not worth it. You're not going to find any unusual, if you find a whale in this one, it's unusual. But you're not going to find any unusual activity just because it's a penny stock. It's just, there's not enough there. And so no whale's going to go after it. And so there's not going to be anything too exciting going on with it. But if we do look at the past 7 days, the stock price coming down here. We see some puts being sold here. Net put premium came down by almost 7,000, but net call premium came down by almost 5,000. So kind of neutral there, but that is more bullish because fewer, the call premium came down less than the put premium. So that does suggest, it's a little bit more in the favor of the bulls, but generally it's not so good. We do see, the increase in call premium over here going up 2.69 thousand, whereas the net put premium on that day went up by only $347. Again, it's not that much. So yeah, I don't feel that confident in this one, so I want to get out. And I feel like I will be able to exit unscathed, or at least not majorly scathed. Because just looking at the chart, I think that, I got this downtrend right here. Pent up aggression, let's boost out, that's what I want to see. I want to see us break out, get up to 3, and then I'll be on my merry way. All right, but yeah, let's get back to the spreadsheet. The next one, this one I'm super excited about. The Intel, ticker symbol INTC, $30 call expiring June 20th. Also, I am looking at and holding the Intel $50 call that expires January 16th of 2026. So a leap from now. I did buy one of these, actually 2 of these contracts. Wow. Aggressive on Friday, so feeling pretty excited about that. And really, that's just kind of like a rotation from this one that, expires sooner, the $30 call, into the $50 call that expires a little bit later, because I did sell some of these, 3 of them, it looks like, on Friday at 20%, greater than 20%, and 30%. So, that's pretty good. So from that, I made, right around $50 about. So that's pretty good. And I am still holding some contracts. It looks like I've got, I was expecting 2, but it looks like I have 3 that I plan to sell or trim out of at 80%, 100%, and 200% profit. So it will be really nice if that happens, but I do think that we might see a little bit of a cool off following the pop that we saw on Friday, but maybe not. We'll have to look at the data and see what that tells us. But yeah, I mean, here you can see in the stock price in green there that we did get a little bit of a pop out. Same with that premium. It's just been like getting bled down, pushed down so much, the blue premium there. And then my average, of course, is in red there. And so, yeah, starting to be in the green. So that's nice. And so, yeah, I mean, for this one, like I said, it looks like I have 3 contracts and my average is 68 cents. The low from Friday was 49 cents, so in the red. But the high and the average were both in the green for me, so that's looking pretty good. I feel like it probably closed right around my average, so nothing to go on about. I do think it spent a lot of time around 67 cents, so just below my average. But, I do think that this could be kind of, a breakout moment and that this could be going higher. So I'm feeling pretty good about that. And with that being said, since I did trim out of my position at, let's see, what did I sell at? I sold at 82 cents, which I think was actually supposed to be a 10% trim, which was this one, believe it or not. So I had, let's see, I want to click over here to see it. So yeah, up here you can see 82 cents, 85, and 89. I think I had a sell at 75 cents, which I believe would be 10%. Makes sense from about 70 cents here to being at 7 cents higher than 68 to 75. So I had a limit sell at 10%, but it got filled at greater than 20% at 85 cents, not 75 cents. So that was kind of a nice surprise. Surprisingly, though, the one that I had placed at 20% profit, which was at 82 cents, that got filled at 82. Would have been nice if that also got bumped up to 85, but whatever. And then the 30% trim was at 89 cents. So, I feel good about that. I'm glad I'm still holding some contracts, and I do plan to, add one more back if it dips to 65. So that'll lower my average a tiny bit, but kind of negligible. It really just, put some more back into the position, so I'm ready for the next pop. But anyways, looking at the data over here, we can see the spike in volume in blue there, and that does correspond with a spike in premium of, $2 million. So that's a good amount of premium there. Other than that, though, we haven't really seen too much notable activity. And following that spike and all this, little blips in volume, we have seen that open interest go up over time. So that is looking pretty good. And then if we look at the other contract, that $50 call that expires in January, let's see, this looks like it's maybe a little bit newer of a contract. I'm not really sure. They both go back the same amount of time. That could just be when I started tracking them too. But with this one, what we can see is this spike over here corresponded with a spike in premium of around, let's see, 160,000, 163 it looks like. And then this more recent spike that corresponded with a premium of about 95. Interestingly, I was thinking that, the open interest was coming down, but we actually don't have that data yet. And so with this spike, I would expect open interest to be going up more. So we'll have to see. It'll be interesting to see next week. But generally, the open interest has just been kind of flat. And I'm actually kind of surprised. This was, probably just, a whale day trading, on this day, because we have $63,000 traded on that day. But then if we scroll over here to see the change in open interest, $63,000, only 300 contracts were added. So it's not, a super substantial amount. And we've also just seen, pluses and minuses around here, oscillating, not changing too much. So it's, 67 to a little less than 67 to 67, a little less than, so it's just been kind of flat. And so maybe with the spike here in volume, the spike here in premium, maybe we're going to see a spike in open interest. So that would be a good thing to see. But, we'll have to wait and see. And so if I do get over here to the chart, what we can see is this beautiful gap up. I was posting about this on X. I was posting about Intel, just like wondering, like, the data, what am I looking at? It just looks really good. And it ended up being, spot on. So that's like, I'm getting better at understanding the data in unusual whales and utilizing it for trade. So, I'm just excited about this. And I did, pick up some more contracts on this day, but, I feel like I picked them up at pretty low prices. And maybe, I want to come back to this one. I got two here at 64 cents. So I got one at 33 and one at 31. What was the low? 25. So, I got lower than the average, on average 32 cents. So, I feel, fine about that. I think that this will be going higher, but to 50 bucks, let's look at the chart, because, let's see, 30 cents is this, or $30 is this other one, then 50 over here. But yeah, with this gap up, what I could see it pulling back to, the close from Thursday, which was 1967. It does look like I have an alert here at 1996. And let's see, what was the high? That was 1995, the high on Thursday. See, I'm just going to leave that alert there. Actually, maybe I want to check to see what that alert is. Is that below? Yeah, okay. So I'm actually going to change it to 19. I'm just going to change it to 20. Let's just leave it at 20. And that would, get my attention to it. So yeah, 20 bucks there. But yeah, it's possible we could fill a gap here. That's, let's see, at 1967. So yeah, actually, let's do that. Let's alert myself, at that specific level. If I see it come down to 20, that's going to stand out to me no matter what. And actually, maybe I want to go back to over here. I got this buy here, buy for both of them. Yeah, so I'm not going to note 20 bucks, which I might, put up here. But yeah, I'll just keep my eye on it. But yeah, with this gap up, what I could see is maybe, pull back to around here, corresponding with the consolidation going across this way. So that seems, somewhat reasonable, feasible, coming down to around 21, about 50 cents from where it's currently at. And also, maybe it's coming down to this 786. That is based on, this level over here. But really, I just think like in between that range, so from about 20 bucks up to around 21, I think it could be finding support there before continuing higher. We see this nice spike in volume. We see the RSI starting to trend up. And then we have the histogram here for the MACD starting to go more green. So that's looking good. But yeah, why did I pick 30 bucks? We do have this gap here at 28.87. I think that could get filled. But, I could see myself holding this for beyond June to potentially be getting up to around 50 bucks, which looks like it was right around the high of December 27th, 2023. The high was $50.60 marked there. So, maybe, that was like a little over a year ago, maybe a year from now, we get back up there. It seems kind of reasonable to me, although I think that we could have some trouble, getting above this uptrend, once we fill that gap. So maybe we need to consolidate here, really fill that gap with some price action. So, like I said, all these contracts, if not all, will go to zero. So this one, with the $50 strike expiring in January of next year, that may be going to zero. But, it doesn't mean it can't make money in the meantime. So that is the intention. But yeah, let's look over at the data from unusual whales. So I'm just going to type in here Intel. So we can see from the day of Friday the 17th, what we can see is that price action, this is following a gap up, kind of hung out above that level. So, this, gap up, it hold the gains. It didn't retract. So that's looking good. I feel like that's pretty good. Also closed in the upper half, close to the upper quarter, if not in the upper quarter. So I think that's looking pretty good. And then we see that the net put premium in red has come down over the course of the day. So that is bullish. And then we see that the net call premium did go up and stayed up over the course of the day. And we do see that volume being increased. And so that makes me think more calls are being bought. That is bullish. And like the puts that were being sold are probably more expensive because they don't counterbalance the calls that are being bought. So there's a net increase in that volume. So I think that's good. And what we can see for this day is that the net call premium increased by $2.27 million, which you can see over here, whereas the net put premium decreased by 4.64 million. And so, in thinking about that, it's like, well, why is it green at the bottom if the net put premium went down so much by more than double what the net call premium increased? And so it's probably just because, the net call premium, those were cheaper contracts, a lot of volume pushing that up, whereas the net put premium was probably fewer contracts that were more expensive. And so, smaller volume decrease. And so that's why you see a net increase in volume over here. And so that would actually make me think that people were shorting Intel massively, over $4.5 million. But then that put premium betting on it going down that was sold. So that's basically, whether it's not being short. It's not necessarily being long, though. It's just not being short anymore. I feel like that's people taking profits on puts that they had, taking that 4.64 million out of it, and then maybe rolling that into calls, half of it into calls to boost that up 2.27 million. And it actually does make sense that short positions would be taking profits around where it's at now, because if we look at the chart, Intel, I can go back to the weekly, and we could see, actually, I guess, yeah, maybe I was zoomed out a little bit too much, but yeah, I mean, it was up at 62 over here, coming down. And so it's been pretty short. I don't really need to show it on the weekly to illustrate this. But just, yeah, like going up to this high of $50, that was the high of over a year ago. It's just been pushed down so much. And so, also, with there being like kind of a double or triple bottom here and, putting in higher lows, there's no bullish divergence with that, but higher lows in the RSI, higher lows in the stock price, really from here to over here. So, that could be suggesting a bottom. And if I do switch over to the weekly chart, we see this 786 here in yellow at 1886, currently well above that now. That is, let's see if I can show you here. That is this retracement going from the low that was hit on the 11th of September 2009 of $6.92. And actually, this is the weekly, so it might not be that exact day, but the week that ended on the 11th of September. The low for that week was $6.92. And then going up to this high, that's at $62.70. That high was hit in April of 2021, at the end of that bull market, getting into the bear market. And it's just been, aside from this rally, just, a big moves down for Intel. And so it makes sense for those who are holding puts to be taking profits. And so that's what I see here, taking that money out. Expensive contracts because they made money on them. So no longer being short, rolling that money into calls or, others going long. So I think that this just looks phenomenal. But the thing that really stood out to me, I'm just going to go to 2 days, not 7 days. First, I want to look at 2 days. This, is mind-blowing to me. I'm really, this is what stood out to me. This is what I was posting on X about, is this drop here. This was a drop of 4.6 million. This is even bigger. this was a decrease of net put premium nearly $16 million, $15.98 million, whereas net call premium on the 16th increased by 1.43 million. And so this is just like $16 million being taken out of these puts. But what you see is the volume in green there increased. And so that tells me that puts, those who are holding puts, those who are short, made money as Intel came down. Then they're taking profits now because they think the bottom's in or is near or, whatever. And so they take that profit and, that's a small number, a small volume of expensive contracts, taking that product, taking that, what's the word I'm drawing a blank on? Taking that profit, I'm an idiot, and, then rolling that into a lot of cheaper calls. And so that's why you see an increase in volume. Small number of expensive puts being sold, a large number of cheap calls being bought. And so, with these contracts, you want to buy them cheap and sell them expensive when the play is done. And so we're seeing bottom signals here in the unusual whales data for Intel. So I'm just like super stoked about this. I noticed this. I'm getting more familiar with looking at this data. Stood out to me like a sore thumb. This is a total bottom signal. And if we look at it over the past 7 days, we can see this, kind of shifted from being not that much volume, more selling, calls and puts, not really being too crazy, and puts, increasing a little bit. But then we first started to see puts decreasing here. This was a drop in put premium, a net decrease in put premium by nearly $6 million, whereas net call premium only increased on the 13th here by less than $1 million. And then, so here we're starting to see this yellow, bottom in the price starting to go up. This is just beautiful bottom signals in my view. But with that being said, looking at the chart, because we did gap up, we might see a little bit of a cool off. We might see a little bit of a retracement. And, I suspect we will go above 2162. But if I were to do a retracement, let's say that is the top, and we pull back to 1873, or like based on that low, I should say, and then we go up to 2162. The 618 is 1983. And so, maybe we do pull back to that level. That would correspond with, while not necessarily a gap fill, which would be getting to the close from Thursday the 16th, which was again at 1967, but getting down to around $20. That could happen, but let's add another level here. I'm just going to add the 50% level just to consider that. That's coming down to right around 20. So yeah, I could see this pull back by, $1.50, and that would be, a great opportunity to establish a position, whether shares, contracts, whatever. I like the longer dated ones. And yeah, I just think Intel is going to have like a rip your face off year following, the past couple years of it just really being decimated overall. But I should also note too that, in the after hours, the price is at $22.14, so up an additional 3% following the increase of 9.25% on Friday trading hours. And so the after hours price of $22.14 is above the high from Friday. So overall, Intel is just looking phenomenal. So I'm just super excited about it. I'm really happy to be involved in it. And I have to say, I have to give a shout out to Mr. Chart Norris. I was going to say Mr. Shart Norris. Mr. Chart Norris on X. It's Kolov 23. I think he's a Polish guy. He posts great charts. I follow him. I think he's a great resource. And he put this on my radar when, the stock price was up here. And I didn't really, let's see, when did I start to establish? It was a different contract. It would have been probably this contract. So I started establishing a position back on December 5th. So, right over here when it really started to come, I guess right here where my position was started, where it started to come down. And so, I managed to like be patient, establish this position, basically while he's posting about, it being painful, how it's going lower. But that's just, if something goes lower than the price you enter in at, that's just more opportunity. And so that's how I viewed this one. And, I think that this is, I made 50 bucks here so far. I think I'm going to be making hundreds with this. So I'm just stoked about it. And I feel like you could probably tell just how I'm rambling on about it. But with that being said, let's move on to the next one. So here, looking at the Luminar ticker symbol LAZR, $15 call that expires January 16th. So this is one I'm intrigued by, but, there's just not enough data behind it really, perhaps not yet. But so what I am looking for with this is a dip to around $1 per contract. The lowest it's been has been about 114, but really, as you can see, lots of gaps in the data just because it's not really traded that much. You can see not that much volume over here behind Ed there. Not that much volume traded, good amount of 0 days. But so with this, I had talked about $6.66 being a little bit of a bad omen. I'll go over that in the chart that more or less played out what I was expecting. But, it did, really, as you can see, going from 666 to, above 8, nearly to 9. Price really did take off, as you can see that, jump over here. And so, but, it did pull back. We did get a bounce from right around $6. And so, that's more or less what I was expecting. Yeah, I mean, we did pull back to lower than $6. So, I feel good about that. I feel good about my superstitions because other people are superstitious. It doesn't matter if I am, it matters if people are. And so that was a good omen to say, hey, don't chase it. And so I didn't. But yeah, what we can see here is that, a spike in the volume, this corresponding with an increase in premium of about 80,000, a little bit less than 80,000. So it looks like 78.8 thousand. And that corresponding with an increase in open interest in green there. So that's good. But really, there's just not too much going on. So, really because they just had a reverse split recently. And this contract's pretty new, so I'm not too surprised there. But yeah, let's look over at the chart so I can talk about, this 666, superstition that I have. And so here looking at the chart, I was basically saying, I think this was Friday on the 2nd. Nope. That would have been here. Friday on the 3rd of January, the close was $6.66. So, with that being a bad omen, whatever, I was thinking price, like this purple line suggests, could be coming down to around, 575 or 6, whatever. We didn't see that. We saw it really take off, hit a high of $10.40 on the 7th before pulling back. And so that pullback was really what I was looking for. And, this dip here where the cursor is, that was just kind of a doodle, but I was really just looking more for, really like right around $6.11. I don't know if you can see that there. That's the 1618. So when price was up here, I had drawn this before the reverse split. Really after the reverse split, I did go over this, and I had talked about this Fibonacci retracement that includes that low of 1088 right here. You can see that line there, but then it also includes the 1618 at 611. I didn't think price would be coming down to that level, but it did. And so I was looking for a retest of that also because if we look at this light blue Fibonacci retracement, we can see that, the 786 is at 610 there, right where that cursor is. So that does match up with that 611. So I felt pretty good about that. But I was also considering, well, maybe it finds support at 702. But we did not see that happen. So I'm actually just going to remove that 618 because I don't think it's really that useful. We just got confluence of levels here right around 610, right around $6 being a psychological level, all this consolidation over here. So all of that makes sense. But how did we predict, how could we have predicted, the top side here being 1040? I do have, let's see, this Fibonacci extension here. You can see from the low over here to this high back to the low here. We do have the 100% retracement, which would be effectively, this move from the low to the high there. Translate that from the low here up to this level, that would be at 1265. So I could see price getting to there. But we didn't see that. We got rejected, it looks like, from the 618 Fibonacci extension at 970. So that would have been a good level to take some profits. But for me personally, my average of my shares, I do have some shares in this one, is higher than 970. So I wasn't looking forward to doing that. But I didn't want to be like adding aggressively here. I wanted to be waiting for a pullback. So I did add, I believe, at 610. Not super aggressively. I'll add more in the coming week. But I actually view that the new level, I'm not sure exactly how I came about it. Maybe it was from the low over here. The open here is around 626. I could see this pulling back to around 625, and maybe that being the new bottom before continuing up to, maybe fill this gap here at 1470, right around $15. And so that is why I picked that strike of, let's see, $15 for this one. I think that seems pretty reasonable, especially with this big move here. We hold this uptrend. I think we could be seeing $15. So if this does dip to, $1, I'd be willing to pick up one of those contracts and to risk $100 on it. But yeah, let's look over at the unusual whales data. Probably not too much on it because in all honesty, it's just not that exciting of a ticker. And so what we can see here, this makes me feel like, just looking at the chart here, it's probably going to come back a little bit more, hopefully again, testing and holding 625. So that's what I would like to see. But what we can see here for the one-day data is stock price did, open higher, come down, and close lower. We did see, a decrease in initial increase in the calls, the net call premium, but then that did come down, suggesting selling of calls. And then we do have, the increase in the net put premium over the course of the day. And so it does look like, with this, let's try to understand this premium and volume. Let's think about this. Initially here, we have an increase in the volume corresponding with an increase in the call premium, meaning buying of calls, whereas the puts are kind of neutral here. Then we see the net put premium going up. So people are buying calls, but they are going to be buying puts, but they're going to be buying more expensive puts that are lower volume, whereas selling lower price, higher volume calls, which is going to drive the volume to be negative. Even though there's buying of puts, that looks like, the net premium, for the course of the day, the net put premium was an increase of about 40,000, whereas the net call premium was a decrease of about 32,000. But why do we see, this more of a decrease in the volume when the calls that were decreasing were a lower premium? It's because they were cheaper contracts, so more volume was traded, selling there. And so that's why we see that volume. So that makes a lot of sense. And that doesn't really make me think that, if people are buying expensive puts, it makes me feel like, maybe they're a little bit late to the game. Because you want to be selling these expensive, not buying them expensive. And so if people are selling these calls, this just doesn't seem like, the greatest of plays here. And if I do scroll up, we can see the little bear to bull indicator. It is more bearish. That's not really too surprising there. But I feel like the price and the premium could be coming down for that contract. I think that $1, is feasible for that one. If we look at over the past 7 days, the thing that stands out is, these days when the volume was increasing. This one looks like it was increase corresponding with an increase in the calls, whereas this one kind of odd, because there's this massive drop in the put premium. And so that's a decrease in put premium of about $800,000, whereas net call premium went up by only about $37,500. But that's probably just because Those are super, super cheap calls, I imagine. So lots of them being bought. Might be kind of dumb money, sheep, chasing. Whereas, these puts are being sold, and just fewer of them. So you end up seeing an increase in that volume. But with that being said, if puts are massively being sold, or, a lot of money being sold, taking some profits, this going up. So maybe I take the comment back about the sheep. Maybe this is a bottom signal, but that was for the 14th. And if we look at the chart, the 14th was right here when it came down. And so that would have been a good day to be bullish, because the next day it did go up some there. Nice little bouncer. So pretty cool to see that. But yeah, generally with this contract, I am looking for, it to come down about 50 cents more. So we'll have to see. But yeah, again, it's just not that sexy of one. There's not too much traded on with it. But then now we're going to get into some stuff that's a little bit juicy. This is the one that I took some big losses on, but effectively I rolled them into a different contract that I feel better about. So it's not really the worst thing, but I could have, made my losses less by about $200. But anyways, we are here going to be talking about Marathon Digital. This is ticker symbol MARA. This is the $35 call expiring March 21st. And so that for me is the reason why I ended up losing money on this, because that expiration date, it's only 2 months away now. And I just don't necessarily think that Mara is going to be hitting 35 between now and the middle of March. So that got me a little bit uneasy. I feel like Bitcoin could be taken off. I feel like it probably will be going up much higher, and I think Mara will be following. But yeah, I've got to work with my emotions. And, I've got to recognize when, I made the wrong call for myself. And so with this, I kind of just recognize that, I'm probably just going to be buying more as it's lower. And, I'm just going to be getting more negative with this. I think it was, over $500. Yeah, I think it was, 600 some dollars or something. I lost a good amount, as you can see here from the red. But I just felt like, I'm bullish on Marathon Digital, really from listening to Fred Thiel, the CEO of the company, talk on, I believe, the the David Lynn report, and just listening to him speak just gives me a lot more confidence, not only in Bitcoin mining, but Bitcoin mining in the US. I think strategically it's going to be very important. And, I think with the new administration, I think that's going to be a really good play. I just don't feel as confident about the March 21st expiration. So what I did, I had planned to, I had a limit sell, or no, I didn't have a limit sell. I had an alert set for if it were to come down to 62 cents. It actually went lower than that, so my alert didn't go off because it was already lower than that. And then I just kind of recognized, if it comes up to 62 cents, I should sell one contract to trim just so this doesn't go to zero. I'm not risking that. But then I started thinking about, I could just roll what I have in this contract into one that's dated a little bit later. And so, I could have done this a little bit better, but the way that I did it, I was able to tax loss harvest a little bit, as long as I don't buy back any Marathon Digital, whether that's contracts or shares, for the next 30 trading days or 30 days. I'm not sure exactly what that rule is. But I think better to be safe on 30 trading days. But it's probably just 30 calendar days, to be honest. So I'll just wait a month. So what we can see that I did here is I actually sold 4 contracts just a couple days later at less than, unfortunately, 62 cents. I sold them at 55 cents. And this was just like, the price at the end of the day, the premium was getting pretty close to 62. And so I kind of just wanted to exit, at what I had sold at here. So I could roll into a different contract. And so I did roll into a different contract, which is the $50 call that expires in January. And so I just got one contract at $250. I was up on that by, let's see, more than $100 on on Friday. But what I could have done, so effectively before I sold the 4 contracts, the other 4, the position that I had with the March expiration, I bought this so that I'm not buying any more Marathon. And then it's like, okay, well, since I bought this, I already put more money on the table with it. Maybe it tanks. I feel like Bitcoin's at resistance. It could break out, but maybe it doesn't. And of course, it did break out, but I had sold. That's how it always works. And so after, buying this contract, I sold these before the end of the trading day because, maybe it goes down, maybe it breaks down on Friday. I was wrong. It went up higher. And so, I net lost about $500 with this. So that's not so great. But, basically what my thesis is, I was able to take about 260 out of this, I believe. So I sold, let's see, I basically took $220 and so, $280 out of this, and I rolled from that, 250 into this contract over here. And so that's fine. I'm not, I don't feel bad about that. That's part of the name of the game is taking some losses. I took up, $500 loss over the past week. It's fine. I just, 2 months out, that's just too soon for me for managing my emotions, expectations, whatnot. And so I had to get out of this one. If I would have held, I could have recovered $200 of this because I sold these at 55 cents. It was a high of 105. So 4 contracts, I could have made back $200, and so then I would have ended up only losing $300. But it is what it is. I gotta move on, and with that, I gotta move on. I'm not going to be following this contract anymore just because it's too soon of an expiration date. I just don't like that. I don't want to be trading it. I don't need to be following it, and so instead, I am going to be following this $50 call that expires in January. If a month from now it dips down to around 250, or maybe it dips down to 200 or $3, I should say, then maybe I would add to it. But my plan effectively is, I'm thinking about this as my 0% being $7.50 because, I lost 500 in the other contract. And so I want to make that back at least. And so my plan is to hold on to this until it hits $7.50. So I make back, the $250 that I put in and the $500 that I had lost net. That would still be a profit for me. So, that's kind of my plan, but I would like to, make more money than just break even with this. But anyways, I'll go over the data in these contracts, what we can see in this one, the $35 call expiring in March. Got these spikes over here corresponding with 3.5 million, 2 million, but then it's just kind of faded, getting me a little bit uneasy. And but we did see open interest just kind of go up, but it's kind of like flattened out. So again, I'm feeling a little bit less confident, prior to the Friday's price action. And then looking at the January expiration, we can see spikes in volume also corresponding with, 1.5 million, 3 million in premium. So looking good. But this one, we're actually seeing, a spike and increase in, open interest more recently, whereas this one, it's kind of flat. And so I just feel like this is, a really exciting one to be holding. And so I feel pretty confident that with this one, I'll be able to make back what I had lost in the other contract. And to be clear, this is not revenge trading. This is just me having a thesis on Marathon Digital that through listening to the CEO speak, through learning more about Marathon Digital, Bitcoin mining in general, the concerns about energy consumption and not being green, whatnot. I think that Bitcoin mining actually incentivizes renewable energy. And so I'll try to remember to include a link to the interview with Fred Thiel where he talks about, basically he's able to use renewable energy like wind turbines beyond what would otherwise be considered not energy efficient enough to use, Bitcoin makes them energy efficient enough, worthwhile to be running. So I just find that really compelling. I find it really interesting. And so, I would rather be in a contract that expires later than, kind of gambling on one that expires sooner than, I'm more comfortable with. But anyways, let's look over at the chart and see what that's looking like. And so we can see, and with this too, we got this nice big move, but, big wick to the upside, hitting high of 2098. After hours, it's only up by about 1%. And so with this big wick here, I think it could be pulling back and settling out. So, while I could have lost $200 less with that contract, I think that, I've positioned myself to be a little bit more comfortable, and there's value in that. And so, I feel pretty confident I'll be able to make money with that contract, considering that we are in, really the Bitcoin bull cycle, the year following the halving. This is going to be alt season and whatnot. I think we're going to be seeing new highs. We're going to be revisiting some highs. And so why did I pick, 35 and 50? Here we can see 35. That was the high going back to like February of 2024, the end of February. Kind of hit like a double top there too. So, 35, it seems reasonable with that high of like 34.09. And then if we go back further in time, I really just wanted like a contract that was more pricey than, this $34 one. And so really, I think it's probably just like this consolidation that we have here. Leading up to this high of like 83, we do have, I'm just going to actually put a box around it so I pay attention to it. Got this, nice little box there, and the floor of that is around 48. So that is, some consolidation that, makes sense to me that could be acting as resistance moving forward. And, so that seems like a pretty reasonable target. Also, we got this peak over here. So, 50, I think that we could be heading there this year. And so I think that that contract at $2.50, I think that could be getting into the money by January of next year. So, I feel pretty good about it. But, like I have this thick purple line here. I think that might be some resistance. So March, maybe that's a little too risky, or at least it's too risky for me. I feel uncomfortable with it. But anyways, enough rambling on about that stuff that I'm just excited about. Let's type in Mara over here so we can look at the 1-day data. This is actually looking pretty good. See price go up in yellow, kind of flatten off, pull back a little bit. But, with that, we see the net call premium going up in green there. And that looks like $10 million net call premium increase of $10.36 million over the course of the day, January 17th. So that's looking pretty good. Whereas net put premium went down by $1.44 million, being pretty close to flat, but going down a little bit. Excuse me. And so that suggests to me that, calls going up, that's bullish. Puts going down, that's bullish. So this looks good, but maybe we see a little bit of correction because of this purple line there, but maybe not. Maybe we break above it with Trump's inauguration and stuff on Monday. I think that's bullish for Bitcoin and Mara, and actually Fred Thiel, I believe he was at the crypto ball, that was hosted by the crypto czar. That is it Zach's? Is it Jason? It's not Jason Zach's. David Sachs, the crypto czar. So anyways, I'm just going to go over to the 7-day here so we can see nothing to stand out here. Do have puts that drop down here. Looks like decreased by 5.6 million. So that's bullish. And, I'm not going to spend so much time on here. It just kind of looks nothing too crazy. Looks like a bottoming signal. And then here, looks like we could be reversing. Like, look at this dramatic change in that volume. Nothing, a lot. So looking good. But let's get back over to the data. I've been doing this for 1 hour and 47 minutes, and I'd like to be wrapping it up pretty soon. So let's get on to the next contract trio, which is going to be NEO. So we've got the $10 call expiring May 16th. Also got the $8 call expiring June 20th. and also have the $15 call expiring January of 2026. So let's look at these. All of them, I do have a position in. The first one actually that I was tracking was this $8 call. That was, largely because of this thesis of Chinese stimulus and Chinese stocks just being beaten down. I think there's some other factors with it too. I forget. Oh, tariffs being, more talk. Maybe there's going to be some, friendships made between Trump and is it Xi Jinping? Perhaps I have that incorrect. I'm not a foreign policy guy or anything like that. Xi, I think that's right. I don't know. Maybe I'm wrong. But so, yeah, I think he's going to Trump's inauguration. So maybe that's, going to be bullish for Chinese stocks. Maybe there's some stimulus, which we're expecting in 2025. So I feel like that seems really good. So that's kind of been my, overarching thesis for NEO. And this one kind of, is on my radar because of the spike here that corresponds with, over $250,000, which is really not that much considering these other contracts that I've seen. But with this one, we can see, increase in premium. And this is one that, I have to say I'm pretty heavily loaded in. This is the June call. As you can see, I would be, I think 900%, that would actually be a 10 bagger because a 100% is a 2x. So this would be, I think, a 10 bagger, but I have it going up to, that. I don't have limit orders placed there, but, I just have, the fun rainbow there, the colors and stuff going up to that high. So, yeah, I've got a lot of money in this one. I feel pretty confident in it, but I'm a little bit concerned maybe I'm too early. But with this, I did add to my position last week. Just on Friday, I thought, it seemed like it was kind of moving up in the stock price a little bit. You can see there in green, they're going up. And so, I thought, well, my average is 49. I'll get it down by a penny. I'll get one more contract at 28, and it does look like I have a buy placed at 25 cents to really just more aggressively be getting that average down. And then also looking at the May call, this is, a little bit getting too close for comfort for me. But the reason why this got put on my radar was because I saw this spike in volume that corresponded with an increase in 1.6 million in premium. And from that, we did see an increase in the open interest. But since then, it's kind of faded a little bit. So maybe a little bit concerned there. But, just like the other call that expires in June, I did add to my position here. On Friday, did pick up one more at 13 cents, which changed my average from 17 cents to 17 cents. So not really that exciting there. But, just getting another contract. And if it does dip to 9 cents again, then, I get another one. But this is one, that I have kind of perhaps overloaded myself with, but because it is expiring sooner than June, I just have it incremental by 10% going up to 100%. So not getting into 10 bagger territory, but just trying to be a little bit more conservative because it does expire sooner than the other one. And then the other one that I think I just more recently started adding to this, I guess, over the past couple weeks. Looks like I just have 2 contracts. I don't have any limit sells placed on it because, I want to see the May and June orders filled first. Once those get filled, then I consider selling this one. And this, as I mentioned before, is the $15 call that expires in January. I did pick up one at 40, one at 30, so my average is 35 cents. I would pick up another one at 30, but it doesn't look like that was filled on Friday, and I probably didn't have it placed earlier in the week when the lows were below 30 cents. But this one, a lot more wiggle room as far as the expiration goes, an additional 6 months relative to that June expiration. But it is a much more notably higher strike, $15 versus the June, which I have 8. And the other one, which is really just following the data that I was seeing, is the $10 strike. And so the $15 strike one here that expires in January do have these spikes in volume that correspond with premiums of at most about $500,000. So, it's a good amount of money, but not an insane amount. All of these spikes are more than $250,000. So, it is more notable than just the spike here, which is about $250,000. So this is looking pretty good. And with those spikes, we do generally see increase in premium, but it has been, kind of flat over here. So this is probably some day trades, really just some kind of like day trades. But this one did correspond with an increase, and it's just generally been going up, but then kind of flattening. And so let's look over at the chart to see this one. We can see that, it has kind of spiked up a little bit. Yeah, so going up about 4.81% on Friday, so that is nice. And the thing that really gave me some confidence with NIO, I do believe I went over this in the pre-market prep video that I'm going to be trying to do those streams or videos every day the market's open. But, I was just trying to figure out, we see this down move and then consolidation. Is that a bear flag or is that a bottom? And so I had this green line drawn here at $4.09, which is, as you can see, kind of arbitrary. And, that was just basically the high over here from April 18th of 2024. But then, I'm kind of curious. I do have this Fibonacci here. I'm just curious where the 786 is. Maybe that corresponds pretty nicely with 409. So yeah, good to throw that back up there. That's around 413. And so, with 409 being kind of an arbitrary level, but also $4 being a psychological level, I'm thinking, hey, maybe, it's a little bit below those levels, but maybe it's forming a bottom. And then I'm just thinking, well, is there a trend line or anything that I can draw? And then so just looking at, the lows from over here, going back to the low from August 8th of 2024, and then connecting the other pivot point with the low from August 28th. So just, very basic 2 pivot points there, trend line. Let's see where that takes us. And, that gave me some confidence that this is in fact not a bear flag, that this could very well be a bottom, because we've got a beautiful intersection with that line at $4.01 on the 13th Monday of last week. Got another test of it, hitting a low of $4.02, hitting that uptrending, subtly uptrending level. And then the low on Wednesday was again 402. So wicking below, kissing that level, giving it a little smooch and then bouncing back up. I like it. I like it. And then we did start to see this move. And so what I think will be really interesting to see is, do we see a little bit of a pullback and it holds 4? And then we start to move higher. But really, we've just been getting rejected from this downtrend multiple times and then taking an even bigger step back. We've got this orange downtrend that goes back to like 2021, I believe, the beginning of 2022. Sorry about that. Yeah, lots of rejections here. Haven't really traded above that level. And I just view price being able to get up to $8. I do have this green line here at 7, but we nearly got to $8 over here, hitting a high of 771. So maybe we eclipse that. I do have pivot highs over here around 957. Don't know if you can see that. Maybe I'll make that white so it's a little bit clearer. Right around $10. And so that corresponds with that May call. But yeah, Y15 for the end of the year. We do have a pivot high over here. It does look like it's marked there at 1618. And that was around August of 2023. So maybe we get back up to there. I could see it happening a year from now, but maybe it's kind of a volatile move to the upside and we get a rejection. But in that time, I could be taking some profits on those calls, so feeling good about that. But let's dive into the data. What is Unusual Whales telling us about our friend NIO? What we can see here is that the stock price, did go up. As we know, on Friday, and then kind of consolidated. So looking, pretty good there. It held its gains for the day. We can see a decrease in the net put premium that suggests selling of those puts, which is bullish. And then we did see, a big up move here in call premium, but then kind of pulled back some, but not that much. And then it did trend going up higher. And so if we look for over the course of the day, or the total of the day of January 17th, we see that net call premium increased by 227.55 thousand, as you can see here where the cursor is, whereas net put premium decreased by almost 28,000. So that looks bullish to me. Although, it's 500,000, more than 500,000 net call premium increase. Would be great if it was like in the millions, but maybe we'll see that if we look at the past 7 days. And actually, we do see, a lot of puts being bought here. And this corresponds with net put premium increase on the 8th of January of, let's see, 828,000. So that's not looking so good. And then we have seen, some selling of calls over here. But then, we got a sea change here, going from red in the volume, selling, and a lot of that selling being calls, calls coming down here, calls coming down. And so that's not such a good look. But then we start to see, hey, what's going on here on the 15th? We got calls going up. And calls not going up so much here, but still green volume on the day. So that's interesting because calls and puts both look like they're negative. So that's interesting to see. But it's really just corresponding with the volume. So that volume's increasing. Whereas, premiums going down. And then just on Friday, we see, puts clearly being negative, like I was just talking about, and calls being positive. So overall, I think that this could be suggesting that NIO put in a bottom and that we might actually start to see the chart breakout from these downtrends, the stock breakout from the downtrends. But maybe we, again, pull back, test $4. And, maybe in February we start to break out because that's when we really start to get to the point of this trend here towards the end of February there. So I think that we could be seeing some violent moves to the upside by the end of February. So I think the May, June, and January calls are all going to print. So I'm excited about those. But anyways, let's get back to the spreadsheets over here. So here looking at plug. This is one that, I'm kind of contemplating whether I should continue to cover it. So let me know if you want me to keep covering this. But this is the $5 call, again, expiring in January of 2016. This is one I'm intrigued by, but kind of like ChargePoint, kind of like Hycroft. I just don't really feel like there's enough data or enough premium behind it to really give me confidence. But I feel like looking at the chart, I do feel confident in $5. So, I feel like it's kind of... This is more based on my technical analysis rather than on unusual whales data. And so, but maybe this is a love play though. So maybe I got to be cautious of that. But anyways, I don't have an order placed, but if I were to place an order, it would only be after I see a low of 40 cents be hit. So far, the low on Friday or the past couple weeks that was hit was 45 cents, and I just wasn't tracking it back here when it was below 40 in the past. And so if we do dip to 40 cents, then I would consider, depending on what I got on the side, establishing a position. But, as of right now, haven't seen it. And I do feel like the data actually kind of reflects that we'll be seeing a pullback. So if it even does hit 40, I might still be on the sidelines and just kind of evaluate to see if the data starts to get more aligned with a more bullish thesis. And so what we can see here is the spikes in volume in blue correspond with spikes in premium here going up to like, this one over here was around 40,000 or so, kind of covered up by the IV a little bit, but it looks like it's around 40,000. And this one, 70,000, this one around 90,000. So it's, more than what we're seeing, with the Hycroft, 4,000, more than what we're seeing with ChargePoint around, 9,000. So, yeah, while I feel like there's less backing plug than there is with the other ones that have a lot more volume data traded on them, this is, better in my view, much better than Hycroft or ChargePoint. So, I am intrigued by this, especially with it being a year out for that expiration. We do see, we did see, the open interest spike up and then pull back. Generally, we have seen an increase in open interest. So I think that's good. But if we look over at the chart, I think there are some things that stand out to me as, I'm not being so confident in them. And really, we just saw a pretty massive red day on Friday, down nearly 11%, closing below 250. And so actually, this one, I think I want to look at some the max pain because I was accumulating shares of Plug, as I've been doing videos on them, but then, I just saw like, rejection from like 330 and, it's kind of just like these stair steps up. And this is actually just like a beautiful, Fibonacci extension here that I've drawn, from the low here to the high here and then down. 100% move from that. So basically the distance from the low here to the high here taken from here is this 100% move at 319. That was a beautiful top level. And, I didn't really respect that. I do sell covered calls on the shares that I have, but I kind of trimmed out of my position a lot up here. I still have more than 100 shares, and that's really just to be selling covered calls. And then I got a little bit extra just for funsies and stuff. My average is around 220, so I'd add more if it dips to below there. But given, this red line here and this uptrend, I don't really think price would be coming down, much lower than 226. So I feel like I'm kind of safe holding what I have, but I don't think I have the order placed just yet because I have to wait until pre-market to place it. But I do view this as looking pretty bearish. And so while I would like to be selling the 100 shares plus that I have above $3 a share, because I don't think it's, I think that the trend is going up now. And so I want to be, if I'm to be selling, at a higher price, not a lower price. But I was just looking at the data and I feel less convinced that at least over the course of the next 4 days, that this will be going, much higher. And so maybe I could make like 1 cent selling a covered call with a $3 strike, which would translate to $1 because it's 1 cent per 100 shares. That's $1. But I think that there is a contract. I don't have to look it up on my phone. I could look it up over here. So January 14th, yeah, $2.50. So it's like if I sold a covered call for 3 cents, I make $3. But then, I'd have to sell if price closed on Friday above $3. And, I'd be fine with that. I make like $70 on it, $80 on it. So that'd be good. And then this $3. But, I just kind of view it as, well, if my average is below 250 and things look kind of bearish, I might as well take the $13, 13 cents times 100 profit from selling a covered call with a strike at 250 and risk it to see what happens where it closes on the 24th. But, considering the data here, and actually I was just looking at the chart, I think that this looks like it's probably going to come down, maybe settle around, maybe to 220. So I'd get some more shares down there. But, I could see it settling down around 225 and then start to move higher again. But if I look over, actually, before I do that, maybe why did I pick $5 for the strike? Why did I pick $3 before? It was up here, but we already hit that. So I want to go a little bit bigger. And so what we see here is, these wick highs, wick high from February 1st of 2024 was 514. And then this big red candle here on May 14th hit a high of 490. So it's like $5. I could see price getting up to there a year from now. And so that's why I think that call is appealing. But if I think that price could be going up to 5, why would I want to sell a covered call with a strike of 250? And so that really just comes from breaking this level, closing below it. It's just honestly not looking that great. My average being below 250, so I'm not risking losing any money. I'm just risking selling at a lower price than I could be selling at. And so, that sentiment really comes from, if I do look over here, let's see, unusual whales. And, I'm just going to go to whatever here because I want to look at the ticker explorer to come to the Greeks and then to type into here plug power to find the max pain. Why is this? Nope. I don't know why it says nope there, but we got the plug data here behind plug Ed's head. And we can see that the max pain, this was for this past Friday was $3. What did we close at? 244. So that's not such a good look. That's kind of bearish. But if we adjust this to 124, this upcoming Friday, max pain is 250. So actually, maybe I don't want to do that. Maybe I still, no, but like the chart doesn't look so great. We close below max pain this Friday. We're already below this max pain. And yeah, I mean, it's part of it is taking profits. And you know, so if I'd be able to sell a covered call, make 13 bucks on that, and then sell 30 bucks above my average, you know, make some money. That's 43 bucks made and less risk. So I think that's good. And I'd still have some shares to hold. So, you know, I feel fine about that. But anyways, let's look. Oops, this is not what I want to look at. I want to look at the bigger screen here. And so I'm just going to type in plug over here. And so we can see the data for the 1 day. Yeah, I mean, this just looks bearish. This looks bad. We see price coming down in yellow. We see, you know, call premium coming down in green, so that's not looking so good. However, we also see the net put premium coming down, so that's kind of bullish, but the net calls going down more than the puts, so that's, I would say, arguably more bearish. If we do look at the little slider here, 52% bearish, and then the difference is either neutral or bullish. So, you know, it's majority bearish. And yeah, I mean, we see that this volume is lots of selling, and the majority of that selling is of these calls. And so we can see net put premium decreased by 170,000. So that's a good amount of money. But the net call premium decreased by almost 580,000. So that's a lot more money. So I'd say that's a lot more bearish. And so, yeah, so I feel like I could risk selling a covered call with a strike of 250 and I'd be all right with it. But if we look at the past 7 days, yeah, I mean, it's really just like, in my view, not that much data, nothing that like really stands out, you know, calls going up here. But then, yeah, I mean, prices come down and stuff. So yeah, I think that this is just not really set up that great. So I am, you know, fine to risk selling a covered call and to wait for, you know, this contract to come down to probably lower than 40, but I'm just gonna, you know, have that on my little radar. And actually, one thing that I actually know, well, because it would be, yeah, I'll keep an eye on it. I do watch the stocks and whatnot. And so let's go on to the next one, which is going to be QuantumScape here, ticker symbol QS. This is the $10 call expiring January 16th of 2016. This one doesn't look like I'm holding any of it. I do have a small share position, so I am long them in that sense, but I don't have any contracts. I don't have this contract. And the level that stands out to me in the stock price, which I'll go over in the chart, is $5.14. That is what would put it on my radar. But here, just looking at the data, you know, what do we see? We see these kind of small spikes in volume, and then we see some bigger ones over here, which correspond with, you know, spike in premium of, you know, 300,000. This one, the more recent one, 200,000. So that's, you know, pretty attractive. Not millions of dollars, but, you know, hundreds of thousands. So looking pretty good. And following those spikes in volumes, we've seen, you know, generally just overall an increase in, you know, the open interest. So I think that's pretty good. But let's look over at the chart and see what's going on there. And yeah, so let's just click over here. And so, yeah, I mean, I feel like this is kind of just like, let's see, you know, I'm just going to make this line a little bit thicker. And I have to give a shout out to the Bronx Viking. I think that I kind of got this level from his analysis. But we see this downtrend here. Looks like there was a breakout retest. And then, you know, a continuation. But then with that, let's see, higher highs in the stock price. And the RSI was slightly lower, so it is bearish divergence. We have pulled back. And the volume on that upside move it was a little bit lower. So on the 26th here, but I guess you could argue, yeah, it's about even, so it's not that bad. But yeah, I mean, I just think that this is kind of like, really like this is a breakout and retest, continuation higher, but rejection. And then really this is just like a further retest of around 514, which you can see there is the 786 from this Fibonacci retracement. And I might actually, remove the 618 because I don't need to have all of that clutter on there. But yeah, 514, if it pulls back to that, that would get my attention. I think I have a buy order to, I average into positions very slowly just to get a couple more shares at 514. And if that gets filled, then it's like, okay, maybe I want to look at that contract and place an order on it. But let's take another look at that contract. Why did I pick $10? And, what kind of premium would I be paying if this dropped, a little bit lower? Actually, I think the low of last week was $5 and let's see, I think 16 cents. So just 2 cents above this. So getting pretty close, but not quite. And so on that day, what was that day? That was the 14th. And if we look over here, so just behind Ed's head there, we can see the 14th. The premium low is around 99 cents, but then even though the price went higher, the premium stayed, hitting lows of 99 or lower cents. So I feel like if it did come down to 514, I could probably get a fill around 90 cents. And with this expiring a year from now, I think that's kind of a safe bet. But why did I pick $10? So let's look at the chart. We do have the tops over here around 7. And, 7 over here as well. So why would I pick 10? Basically, the pivot high over here that downtrend is based on is around 952, corresponding with 10. So that makes sense there. That's why I picked that level. But now let's look over at the unusual whales data for QuantumScape. And so we can see Friday, this actually looks, better than I was expecting. The price went up, but then kind of faded lower. We can see that as the candle that looks like an inverted candle, hammer candle, so not really that great of a look. But what we can see is the net call premium increased over the course of the day. That's bullish. Whereas the net put premium decreased over the course of the day, going up a little bit towards the end of the day, but really just generally it went down. It was negative. So a decrease in that net put premium, that is good. If we look at the little bear bull slider, 54% bullish. So that's looking good. And so this is not like super, super incredible, but it could look a lot worse. Anyway, so the net call premium increased by about 418.68 thousand, as you can see right here, whereas the net put premium decreased by about $45,000. So, definitely more so on the increase in those calls, but the decrease in the puts, that's bullish, so that's a good look. And if we look over at the past 7 days, yeah, it looks, in my view, these calls going up, but more selling of these puts. So, maybe that's actually kind of getting into a good look. Here we do see this massive drop in the calls. What's going on there? That's pretty odd looking. It looks like the net call premium dropped by nearly $3 million on the 16th, right at the end of the day. So that's kind of a surprise, just a big sell there. So I don't know if it's going to fade lower, but that's, a drop in $3 million. So that's not so bullish. Because we see it like green over here, and then we just see this massive drop in that volume. And so actually with that being a large drop in volume, going from being green over the course of the day to then massively switching from, so over here, volume was around an increase of 834. As you can see, from over here, volume increased by 834. And then basically right after that, it dropped to negative 8,000. So that suggests to me that these were a lot of contracts that totaled, $3 million in premium versus, a small number of very expensive contracts. So that doesn't necessarily strike me as like the best kind of signal to be like, oh, well, this is bearish, because they're cheaper contracts and there were just a ton of them that like really nuked that volume, but it also did nuke the premium here. So maybe there is something to it. I feel like the pullback that we're seeing, maybe it could be going a little bit lower, maybe to like $5. I got $4.99 marked here. And that, so if 514 is hit, I'd probably be looking for 4.99, $5 is the next level to add a little bit, or to maybe whether that's shares or calls. But anyways, let's get back over to here. The next one we're going to be looking at is a Rivian. I got 2 calls to go over. One is a $20 call that expires June 20th of this year. And, that one I actually no longer hold. I did take profits on it. And, initially took 20%, but then my profits kind of diminished, which is maybe a little bit disappointing. I could have actually sold one of these contracts for 30%. But I got greedy and was looking at a price, a premium increase of, I think, I think I had a limit sell. So I had done this initial one back here, a couple weeks ago at 20%. And then for Thursday, I sold one for 10%. And then for Friday, I had a limit sell. I would have had one for 20 and then 80, but then I adjusted it to 30 and 80, I think. And if I would have had it at 20%, I would have sold that again, made $25 versus, $5. But just like looking at the chart, the data from Unusual Whales doesn't necessarily support this, but looking at the chart, looked like it was putting in a top. And Rivian, I like the company and stuff. I like the truck. I like the vehicles. And so this, kind of reminds me of like the Outback of the US, of EV vehicles, of EVs. Don't need the EVVs. Yeah, so I feel like there's, for me, kind of an emotional attachment to that. And it's like, oh, well, the chart looks a little bit bearish. I'm just going to get out of it so I have cash on the side. And so I, from selling, put, 300, about 75, 300, whatever, on the sidelines for me so I can just feel a little bit more comfortable, so feel good about that. And then this other contract is a $25 call, but this one expires in January. So a little bit more comfortable, more wiggle room with it. But again, I don't have a position in this one either. And it looks like I'm waiting to consider adding until price comes down to around $12 a share. And, while I do have this noted up here, this one, the Rivian one, I'm not going to be tracking it anymore just because I'd rather be, these videos take me too long to go over. There are too many different tickers, too many different expirations. So I'm going to cut this June one off. But what we can see in the data here is, this big spike in volume that corresponded with about over $1 million in premium. And from that, we did see a spike in the open interest, and that's gone up a little bit since then. So that generally does look good, but really just what we're seeing in the chart, I feel a little questionable about it. So I'd want a longer dated call. And so that's why I'm looking for this one that expires in January. And this one, it's actually very similar to the other chart, I guess just a different time frame. But this was a spike that we saw an increase in premium of over $500,000. If we scroll down, we can see that that was an increase in premium of, let's see, 542,000, almost 543,000. And that did correspond, with an increase in this open interest, which has more or less held, but we have seen a little bit of a sell-off more recently. So maybe that raises some concern. But let's now look over at the chart. And yeah, so this just stood out to me as, hey, maybe this is looking a little bit bearish. It was before the close. I think really just maybe in the last maybe half an hour of trading for the day, I started to see, well, clearly we're putting in this big wick. It does look like, there was this prior high over here of 1549, I should say. We did have a high on Friday, the 17th of January at $15.34, not being able to get up to that prior high. So that got me a little bit concerned. And if we, let's see, I don't know, where's the low from here? We've got, this 786 here. We did go from the low to the high here, did pull back to that. And, broke through that 786 and then bounced up. But then maybe we come back to that 786 around 1357. Maybe we break below it 1307 here. So maybe, I'd get my attention if we came back to like 13. But really, I think actually kind of corresponding with, I think I have a couple shares, I think, at 1169. I had some shares more than a couple last week, but I was selling into this strength because, maybe it doesn't get back up here and I just wanted to have the money on the side. And so I think really just if it came back to 12, that would be like, well, let's buy my average. So I'm getting, into a position where I want to buy more shares. But, I could see it finding potentially some support here, looking big picture from this retracement here. 13 is the 50% retracement. That would also correspond with this yellow line that I've drawn here at around 13. The lows over here, that consolidation was support over here. Maybe, it has been support over here, but this support broke. Maybe this support could break again. And, the golden pocket here is the range between 12 and 1223. And so maybe that would be acting as support as there was some consolidation over here and, a little bit over here. So maybe that would be some support. So that might get my attention at 12 to then be establishing, a contract position. And so I'd probably just want to wait until 12 for that. I want to be disciplined for it because I could see it breaking below, the 65% retracement there at $12, maybe coming down to the 786 at right around 11 or 1103 marked here. And that level would correspond with all of this consolidation here. I think that could form a nice bottom, and that could also correspond with revisiting this or getting near, this red uptrend, which corresponds to the lows over here of 826, and then also the intersection here with this pivot low of 950 from November 6th of 2024. So yeah, I feel like this could be pulling back, and I just don't need to be like so emotionally attached to this one. Because, I think they got some news about DOE loan or something, or investment, or maybe Rivian. Let's see. I thought there was some news. I thought maybe I'm confusing it with something else. But yeah, here, Rivian gets $6.6 billion loan approved from Department of Energy to build Georgia plant. So yeah, that's good, but that's like, that plant's not going to be starting to get built until 2026, I believe. And it's, not going to be functioning until operational jobs by like 2030. So that's like a, bigger, longer term kind of play. And so, yeah, I could see it pulling back. That's good news, but sell because it's for the future. So, yeah, I definitely going to be laying off on the Rivian for a little while. But let's look over at the data. Maybe some of this contradicts that sentiment that I have. So if we look up Rivian, we can see, this doesn't look so great. So just for the one day on Friday, we see that the share price has gone down in yellow. We, see that the calls started out green, positive, but then they faded to ultimately be negative over the course of the day. So that's kind of bearish. And then we do see the put premium has been negative over the course of the day. So that's bullish. So that's good. And if we do look at that, the negative or the put premium, net put premium was down by $938.5 thousand, so almost $1 million. So that's a good amount to be down. However, the net call premium was down by over 500,000, 565.75 thousand. So that's not really, so great for it to be down on the calls. And if we do look over at this little slider here, the bear bull slider, 30% bullish. But that's only slightly above the bearish, whereas there's, that middle range and the neutral. So yeah, this is just like 250-50 for me to be excited about it. And considering the chart with this big wick here, not worth the risk. If there were a lot of things lining up suggesting this is bullish, that'd be great. But this is suggesting bearish, that it's going to be pulling back more. This is kind of, indecision territory. And if we look at the past 7 days, this was maybe bringing up some confidence. But that confidence was sold out, by the end of the day on Friday, as you can see here. So, yeah, I think that Rivian was a good one to have taken profits on and then maybe consider reestablishing a contract position around 12, and that would of course be with this one in consideration of the $25 strike expiring in January. But now let's switch over to the Unity software calls. I got two of them to look at. One of them is the $42 call expiring in June of this year, and the other is $65 call expiring in January of next year. And so it looks like, I've got both of these. I'm holding both of them. This one looks like I got three contracts actually. And my position on this, I'm kind of surprised, is to be selling at 300% profit. So, I'm feeling pretty good about this one. And I wouldn't really consider to add to this position until it dips down to 20 bucks. But this is, something that, I've got to, kind of reevaluate perhaps. If we do start to see the stock price going higher, maybe I don't want to be so greedy with a 300% swing. Maybe I just want to do 20, maybe 100%. But we'll see. I got three contracts, so I got some flexibility there. This other contract looks like I just got one at $1, and that would again be for a 400% swing, getting up to $5 for that contract. We'll see. But let's just take a step back, looking at this other one. This is one that Rivian. That's not what I want to look at. Unity. Sorry. This other one that I've got here. Just wouldn't be buying until it dips to around 20 a share. There's just not that much volume traded on this one, but if we do look at the data, we can see these volume spikes here corresponded with an increase of total premium of about 180,000. This one only about 60,000, so not so much. But with both of those, we have seen increases in open interest, so that does look good. The other contract, we can see, kind of a bit of noise with the spikes in volume over here, corresponding with like 200,000, 75 or so. So, yep, about 75,000 here. So, looking good, but could be a little bit better. But we actually see, the open interest coming down on this one. So not looking so great. Maybe it's just because it's perhaps an overly ambitious $65 strike on that one. But if I do look over at the chart, this is really just based on the thesis that I talked about, that it's just trading in this downtrending channel, that we had this inverse head and shoulders pattern breakout. We did pull back to the golden pocket here. I don't know if you can see those two levels. That's a 65% retracement up to the 618. Pulled back perfectly to that golden pocket and to that purple downtrend. Bounced from there. And looks like we are kind of, right around the 618 at 2164, currently being just above that. But I do think that we could be heading lower to around 20. That's why I got that alert there. That's why I got the yellow marked my spreadsheet to kind of keep an eye on that. And so that would be coming down to, kind of an interesting level for a lot of reasons. One, at $20 being kind of a psychological level, just thinking in a whole dollar round number, the two $10 bills, $20 bill, one $20 bill. Just thinking of like 10 as getting into the next I'm tired. The next unit, the next order of magnitude, and so 20 is still in that order of magnitude. And then that corresponding with the 786 here, that also corresponding with the middle of this shaded channel, but that's kind of just been an approximate level. It has not been exact, so take that with a grain of salt. We also do have these other levels that I've drawn here, which I don't know that they're that significant at this point, so I might actually delete that. And that one, maybe I do. Yeah, I think I just want to delete that just to clean this up a little bit. But the thing that I just noticed that I was looking at this, it looks like we got a little bit of a gap here. And so let's see, what was the closing price on November 19th? That was 1980. So if I just draw a horizontal line there at 1982, that was probably the high for the day, which I don't want. I want the closing price, so 1980, just type that in there. And then I'm going to make this a dashed line because the gap has not yet been filled, and I like to make my gaps blue for some reason, although it's a little tough to see with all that stuff going on. But yeah, I mean, there's like kind of a lot of convergence there, just like how there was a lot of convergence here. So I think that, overall, I think that Unity Software is a deep value play. And I think that this could, sorry if my hand itches, if you can hear that, I hope not. Yeah, $20. I think that's a deep value play. So that would be the time to, really go heavier on those contracts, get some more shares. And I just kind of view this as, there's this little inverse head and shoulders pattern here. Taking a step back, I'm wondering if we see this as the left inverse shoulder, maybe a head here, inverse head getting up to like 45. So that would kind of correspond with the June expiration contract, strike of $42. So getting up to there. And then in that case, if we got up to that level, I think we could then be pulling back to form the right shoulder over here. And then a measured move from that would be getting up to around $75 a share. And so I just don't think there were any strikes at 75, so that's why I picked 65. But we do see, if I do adjust this axis again, the 3618 from this Fibonacci extension here, it looks like that is at around $63. So it kind of makes sense. But, I don't think it's going to be getting there between now and January of 2026, but I think it could definitely be getting up to 43. So, I would want to be involved in that. So, I'm excited about it. I feel really excited about Unity Software. Aside from anything related to Roaring Kitty, I've just realized that this analysis that I did here, you can look back on these videos. I don't know if they're going to be, hyperlinks. This is the first video that I did. Unity Software is in dip buy zone, and that was on June 19th. So let's look at the chart. Where was June 19th? June 19th was, so I was a little bit early, but June 19th was like right here. And so the low on June 19th was $16. So yeah, overall that would have been a good dip buy. But anyways, let's look over the data in unusual whales. Just going to type a U up here so we can look at that. So we're just looking at the 1-day data. We do see volume increasing, so that's looking good. Even though the stock price did come down over the course of the day, as we can see, if I just zoom in over here, we can see that price did come down. So that doesn't look so good, but what does look good in my view is that the net put premium has come down, whereas net call premium, overall, it's kind of near zero, up a little bit here, down a little bit here, but overall we did see increase in volume. So I think that's good, and it seems like that's more on the call side, more on the bull side. If we do scroll down just to show this little bear bull slider, 47% bull, while the remainder, whatever, we can see bullish 2.2 million in premium, and bearish 1.8 million. So more on the bullish side. And we can see here for the net call premium for the day, that went up by an increase, that increased by about 36,000, whereas the net put premium decreased by about 382,000. So this, does make me think this is looking more bullish. So maybe I'm being greedy, thinking about, this coming down to 20. However, insider Barry Smith Mark, I'm not sure who that is. Let's look at that. Barry Smith Mark, Unity Software. Who is that? Barry Smith Mark, Unity Software's Chief Accounting Officer, sells this. So this is from investing.com. And that's not a lot of money, I imagine that he's got a lot more. Mark sold, blah, 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 valued at, 30,000. The company valued at 8.7 fair financial health score. So yeah, I'm not going to get into any of that, especially with all those ugly pop-ups. So yeah, let's look at this. I think that this looks good. We look over the past 7 days, kind of, waxing and waning here. Prices come down, it looks like generally. Did see a massive drop in calls on January 16th. It looks like the net massive drop in puts in red there on the 16th. So net put premium went down by 2.01 million, whereas net call premium only came down by 233 million or thousand. So that's looking, like this is maybe more shifting to be bullish over here, because yeah, I mean, this doesn't really stand out as much as these past couple of days. So that looks good to me. And then, yeah, let's just go over the final ticker on the list, and that is going to be the Volatility Index, the VIX. And so here I am looking at the $25 call that expires February 19th of this year. This is not one that I plan on trading. This is just one that I think is good to be tracking because I like trading the UVIX, which is the 2X VIX futures ETF, I believe. And yeah, it's just a little bit more friendly to trade, I think. And yeah, so here looking at this, what do we see? We see these spikes in volume corresponding with spikes in premium that are, over millions of dollars. We do see the open interest going up. So I think that's good in the sense that we might be seeing some more volatility. And I think especially with Trump taking office, he's kind of a volatile president. He likes to, in his negotiation tactics, they result in, volatility and stuff, talking about tariffs, taking that off the table, talking about Greenland, talking about Canada, talking about the Panama Canal, talking about all sorts of things. So, there's going to be some volatility. But if we do look over at the chart, and this is something that I will be covering more or less during the pre-market prep videos or streams that I do with the volatility index. I may not be covering this one specifically, but this did, close below 16 on Friday. Maybe it's putting in, higher lows here, or it is putting in higher lows. So maybe it's getting ready for, a big upside move. But what I found really useful to be tracking is the UVIX, as I had mentioned, just because I feel like there are these nice kind of like approximately 2-week windows where it goes up a lot and then comes back. And so we did just have, this move to the upside. And so what I'm kind of viewing as, just like how over here we broke this yellow uptrend and then tested that as resistance over here, I think that we could be breaking below this orange trend line or this orange horizontal line at $30 a share. And we're just about at that level. So for me, I don't have a large position. In all honesty, I just have one share of this. But I do plan on accumulating more if it dips down to, this level around 28. If it does, great, I'll add. If it doesn't, I'll kind of just chill. But I think this is a great way to kind of hedge for whenever there's volatility. This goes up, whereas other stocks are going down. So it can be a nice way to take profits and then roll that into other positions that are either in the red or, just down on the day. So I think this is just a really good one to trade. I like the UVIX a lot, and I think tracking the volatility index is pretty useful. But since it's at the end of the video, I just kind of run out of steam. I am anyways just going to be typing in the VIX here. So we can generally be looking at this. Don't have the yellow line because there aren't shares traded of it. But what we can see is the net put premium came down. And so that is bullish. And then the net call premium has gone up. So that is also bullish. And what we can see is that net call premium went up by 3.63 million, whereas net put premium came down by 11.44 million. You can see those numbers up here. And so, that is, bullish. And that could also just be with it being a long holiday weekend with Martin Luther King Day, also with Trump's inauguration on Monday the 20th. We could be seeing a pretty volatile start to the week. But if we look at the past 7 days, we can see that, there's volatility in the VIX. We got calls being sold over here, that's bearish. Now we see puts being sold over here, that's bullish. So a lot going on. But what we can see from the daily stats is from the bear bull slider, we have it majority on the bull side, with neutral being in the middle, but bearish being, about 10 million, 12 million, really, about, let's see, yeah, 12 million lower than the bullish. So, yeah, I think that we could be seeing a volatile week coming up with Trump taking office, taking over, and, with some executive orders. I think that they could be volatile for a lot of good reasons. So I'm excited about them. But anyways, this video is less than 3 hours. So I think that's a pretty good accomplishment for me. Went over a lot of stocks, a lot of contracts. I hope it was helpful for you guys. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Do these options, weekly options theses every single Saturday. And I also do other videos, ticker request live on Sunday. And I'm going to be trying to do pre-market prep every day of the week. We'll see how that goes. It might be a little bit rough. But anyways, take care, you guys. Thank you so much for watching until the end. I really appreciate it. Take care.